Jesse, you need to make sure that it's enabled when you when people are coming in, that they're muted. You're on mute, by the way.
It is.
Okay, great.
I'm going to make Thais host.
Thais, it's still not muting people straight away.
It's a Zoom thing. Like we have it set up like that.
Yeah, if you can try and change the settings, I think it's down the right-hand side. That would be great. Happy Wednesday.
Happy Wednesday. You see what I sent you in Slack?
Yes. Love it.
Yeah.
We'll let everyone keep rolling in. I wish we had some music. I know that's been a request from our team. We'll make sure next event we have a jingle.
Ari could sing for us.
No, it's fine.
Good morning.
Good morning.
Ari, on the next one, we'll have music. Promise. We'll have some sort of intro.
I can get my guitar right now. Don't worry.
I don't know if everyone's ready for that at 10 a.m.
I'll do something soft and melodic.
If you don't know Ari, you need to know him. He's a part of our partnership team here at DFX and based in New York City and has a voice of an angel, I found out during my birthday.
Thank you. You're too kind. The bill's in the mail.
Alejandro, how's your travels been?
Oh, crazy. I did 8 hours yesterday, so
Wow.
I haven't stopped. I thought it was ending before 4th of July, but no, it continues. So I'm traveling today, so I'm on the road. I just got an office here, so it's good.
Good. Glad to have you. Appreciate you making the time. So while we're just giving everyone a couple more minutes to roll in, I would love everyone to jump into the chat and just say where you're located, your LinkedIn profile, what you're focused on, and what made you join the event here today. We'll kick off in about 2 minutes. Okay. I'm going to jump straight into it. For some reason, Jesse, if you can share the presentation and download it, it's not working on my end. Welcome everyone to day 2 of our DFX Online Summit. We're speaking today around the new era of direct investing and startup capital, talking to incredible founders, investors, and VCs during our 2 panels. I wanted to kick us off with why are we here today And what is DFX? At DFX, we're a private capital ecosystem that supports entrepreneurs and sponsors having access to affordable and efficient capital. We're a global ecosystem that focuses on community-first initiatives, and we host a number of events, including in-person, online, pitch events, and different cohorts that we'll be releasing later this year. I wanted to start off just personally introducing myself. So I'm co-founder and COO at DFX, and you'll be meeting some of our team during the day, as well as Jesse, who is our CEO and co-founder and founder at DFX. And I wanted to kind of just like jump in on my journey and pretty much sharing through my founder experience from day one. I started my first company at 20 years old. I was a solo founder. I didn't raise capital. Everything was bootstrapped. It was very rough being a solo founder. I will say that I was very lucky to have a very creative mind when it came to offshore delegation. Back in Australia, the Philippines is very close by. Built an incredible team, built an incredible ecosystem, was lucky enough in 2021 for our company to be acquired actually by a close kind of friend of mine in the same industry. And after that, I got into real estate and was learning a lot about development feasibility studies. During COVID, as everyone knows, the property market got highly inflated. Didn't think that real estate was really the right path for me. I always feel like I'm going to be an entrepreneur at some capacity, and moved to the US 3 years ago. And so when I moved to the US, you know, I knew how much it took on not only on my body, my mind, but my entire kind of early 20s, getting something off the ground. And I wasn't going to jump back into a startup unless if it was something that was bigger than just making money. It had to have an impact portion where I knew that this was going to be something that I wanted to build and leave my legacy. And so I ended up learning about M&A, and that wasn't something that I was really exposed to back in Australia. So ended up having an independent search fund in Arizona, looked at over 100 deals, ended up getting 300 due diligence, which we did not acquire. And I'm very grateful. My business partner, just it wasn't a fit for us, and we learned quickly. And that was great that, you know, we took those lessons, and I ended up being partnered with an investment bank. This investment bank, while it was a great learning experience, it made me experience what I don't want to be a part of. There was large upfront six-figure retainers being charged, and then, you know, a lot of false promises on the back end. And so at this time is where I met Jesse. And when I first met Jesse, I was intrigued by DFX. It was very disruptive of like everything that I was learning from the M&A and the investment banking background. I knew how hard it was to also find deals, especially, you know, from the boring business acquisition side that I was looking at. That was tough. And as well as then you have to raise the capital for the deal. And so during that time, when I was going through that process, you know, I met a lot of other sponsors and entrepreneurs that were also raising capital. And so I ended up pitching Jesse. And that was it was an experience where I really didn't know how he was going to take, you know, me kind of just being like, hey, I love what you're doing. You know, what capacity could I be a part of this? And he gave me a target to raise capital, ended up bringing me on as a co-founder, and my life has been changed forever. And I'm very grateful for this journey. I thought you were going to say something.
Thank you, Ella. Yes, I'm very grateful for this journey as well. Couldn't have made it this far without Ella, quite frankly. At the time, I was basically an army of one when I met her, and we've scaled this out. We have over 100 people involved internally now, thousands of users, and the company's really taken off. And I guess I'll come in right from that conversation. So my background, previous to this, about a decade ago was running an engineering firm, got into wealth management, worked alongside some of the VCs out here in Boston. I was with an RIA. We raised about 110 million into those SPVs, and then we had another couple $100 million under management. From there, I joined a fintech firm, but also took over this network here that many of you are probably a part of now. They're up to 144,000 members, basically haven't grown since I left, which is funny. But this community here is actually the largest online community on LinkedIn that's not owned by family office clubs. So Richard Wilson, many of you might be familiar with as well. Part of his marketing strategy is to acquire a lot of these already pre-established networks and kind of combine them. This group is the largest that hasn't been. So I was running this. If I click on, say, this 15 for 15, I used to run a podcast out of these, and this was, through 2023. Now, this community, people are listing opportunities all the time. And what I was doing, there's actually a business behind this community called Deal Flow Network, and I was basically connecting people and helping them find who they need to find within this large group, right? It's a big enough established network globally that when there is a need, there was also somebody who could fill that need within the community. It just needed to be the right connection. I was doing all of that pro bono, just helping as many people as possible, helped me establish just a good network for myself through this process. Lynn, this guy here, is an investment banker. He's also a CPA. Phenomenal guy. Him and I have a great relationship. We were going to launch Deal Flow Exchange. It was actually under the Deal Flow Network moniker. We are going to use this kind of branding. I had already built that out, started building it out in November of 2023. And then his brother is his partner, and his brother runs basically 8-figure CPA business out of this network and just didn't want to rock the boat, which is understandable. So they unfortunately couldn't proceed in this journey. And I had to decide, do I want to keep doing what I'm doing, which was great, or do I want to drive this mission forward? Because through this time, I'd worked with hundreds of founders globally, connecting them to capital, saw all of the different challenges between real estate, private equity, VC, everything else. We're doing things everywhere and working with every type of capital provider as well. And there's just this common theme of the challenges of capital raising and why the challenges actually exist. So part of it is that the world has moved leaps and bounds over the last 2 decades, essentially, with the internet, right? So if you wanted to raise capital 20, 30 years ago, especially if it was a lot of capital, you're going to an investment bank and they're going to help you raise that capital because they have the relationships you don't, right? Nowadays, there's so many groups that are saying they have these relationships and charging these founders significant amounts of money, and realistically they're just cold calling or emailing or not doing anything on the founder's behalf, quite frankly. And unfortunately, especially through 2023, when capital started to pull back and there wasn't as much going on, right? COVID time, once money really started flowing up to 2022, it was kind of the heyday of free money, and then it started to tighten up again. So I was just seeing so many founders come to me after spending 6 months with different groups that promised the world and didn't raise the capital and charged them retainers and everything else, right? So after just seeing that over and over and over again, it was clear that what is fundamentally stopping innovation is the access to capital, right? So if we can improve access to capital globally for founders, investment sponsors, everyone else, then we will see more innovation, we'll see more hiring, lives will inevitably improve, right? So how do we do that? Well, there's a couple of things with the capital raising process. It's too expensive and it takes too long, right? And time is money, even more so than the money. So those are the things that we want to solve. Now, how do we solve those? Well, economics of capital raising, that's easy to solve, right? It's absurdly expensive to raise capital, and it doesn't need to be that way anymore. So let's bring that down. And when you think of DFX, you think of other companies that have done the same, right? Zillow made the real estate market significantly more accessible because before it was gated, right? The raising capital has been a gated space for forever, and it doesn't need to be as gated as it is. So think Zillow, think, not to compare ourselves in this capacity, but Robinhood. Robinhood, when they came out with their business model, everybody laughed at them, right? Everybody on Wall Street was like, that'll never work. And then year after year, you started to see firms follow suit, and then the big institutions came down, and it was a race to zero in terms of commissions on exchanges, on stocks, right? And the ETFs. So that is that is what we want to do, is make it extremely, make capital more available, essentially, and put people in touch faster. So economics, easy. Let's just not charge transaction fees. If we don't charge transaction fees, if it's a simple monthly membership that's extremely economical, everybody can afford, we can grow this community just like the one that I was already a part of, right, on that LinkedIn side. So the bigger the community, the more value to everybody, right? There's a thing called Metcalfe's Law. It's basically every additional member of a network adds an exponential value to the network. So, you know, the 1,000th person and then the 1,000th one, that one person jumping in can add 1,000 new connections to everybody else, theoretically, right? So the bigger this network gets, the better. And then just from how do we scale this? Yes, okay, low membership costs. Yes, no transactions. But then also there are these pre-established networks that are out there, right? There are these great groups that have deal flow, that have capital providers. Can we just plug our technology in and tech enable them, and then basically bridge the gap between those networks with DFX? So how we do that is you have DFX as a platform, and then you have these other communities that are able to privately share their deal flow, their capital providers can interact, but then also those founders can opt into having their deal listed on the main kind of screen of deals, and the capital providers can see it too. So basically we start to bridge all these different networks together across the world and make it so that everybody has equal access in that sense, right? And so I started building this November 2023, launched it in March of 2024. Army of one at that time. Again, now we've grown significantly. We have thousands of members in the community. We have deals getting done. We have amazing people spreading the word that we exist. And our entire mission is to provide as much value to everybody in the ecosystem as possible, right? Because if we do that, then we create champions out of everybody, and we just continuously get spread, right? It's a very grassroots movement within DFX, and we're spreading very quickly. So this was the 1.0 version, we call it, that I had built. Functions great. Definitely go on, sign up. It's free to join. Average cost of a paid membership is $39. You can use the code SUMMIT, SUMMIT. You get a month free. But I'm going to give you a quick preview of what we're building next, because this is going to release around October timeframe, and this will change the industry. I mean, if you're not on DFX now, you will be on DFX very, very soon. So let me just pull that up real quick. Here we go. Share. So when you sign in, you're going to have a dashboard here. This right here is a little hint at an event that's going on Friday. I can't say too much on it publicly, but if you're interested, contact Ella at dealflowexchange.com. She'll drop her email in the chat, but you'll be able to see all sorts of things. So you belong to different communities. You'll be able to hop into those. You'll be able to connect better with some of the capital providers that have open networks. Now, when you go to the world screen, this is what it's going to look like. You'll be able to search what you want to see. If you're an investor, you'll be able to upload your investment thesis. It's going to aggregate all of the deals that make a lot of sense for you to look at. So when you click on a deal, you'll be able to zoom in, things like that. And then also you'll be able to actually connect directly with people on the platform as well in this 2.0 version. And when you click in, you'll be able to zoom in. So how this will look, it's not exactly going to look like this, because we're not going to give the exact locations. But when you zoom in on a location, it's going to cluster the people in some capacity, and you'll be able to know who is around. So for instance, if you're sitting in New York City, you can zoom in, and within a couple block radius, you'll see everybody on the platform clustered together that's in that area. You'll be able to contact them, set up a coffee meeting, do all sorts of things in that capacity. Let me just back up here. What else we got? So if I go to networks here, you have your global networks, you have your public networks. So this will be, different types of groups. Private networks, these will be not, you have to request access and whatnot. And then, of course, your networks here. Now, if I go back to global and I go to the New York community, so these communities, think LinkedIn, but just much, much, much better for our space. So you'll be able to, have a feed. Most of this is going to be pictures and videos. The actual wording is going to be kept pretty short. You'll have service providers on the side, local experts, things like that. This will also aggregate all of the deals. So if you're in one of these networks, you'll be able to see everything that's going on in these areas. And you'll be able to click in if you're a founder and you list right now. If you list on the 1.0 version, you know when people engage, of course, but you don't know how many clicks necessarily your deal's getting. This will have a lot of advanced analytics for our founders. And then you'll have all of your events here that will be in the area. So you'll be on top of the private capital ecosystem at all times. This is something we're incredibly excited to launch. A lot of efforts going into this. And we cannot wait to share it with you, but that's going to come out in a little bit. I'm going to hand this over back to Ella for a little bit just to talk about the involvement of the company and let her give her insights.
Yes, I'm very excited about 2.0. I think one of the parts that is in our product roadmap that is going to be very useful for both sides is our identification process, to not only to KYC, but to remove bad actors, but then also to know what investors have actually been involved in what transactions. Something that I wanted to share that we do a lot at DFX, especially around underrepresented founders, is we have our upcoming pitch event. So if you're a founder or you know a founder that would love to present your opportunity to either family offices, angels, or VCs, our next upcoming health tech pitch tank, we have 2 VCs and a family office, all women investors. And then we have 3 opportunities for female founders to present if your deal is on the platform with a pitch video. So it's $29 a month to sign up to DFX. If you use the code SUMMIT, you'll be able to submit your opportunity. Now, if you're a female that wants to learn about feedback of investors, you want to learn about private capital, we do a reverse pitch at the start with the investors to understand their investment thesis, their investment committee. As we know, every investor has a different process and a way of doing things. And I think it's really interesting to learn the other side of what's going on from an investor firm or mindset. So we have that, as well as we have our Hispanic pitch tank coming up. Now, we haven't decided on a sector/industry yet. We have Alejandro on the call, who is actually going to be one of our investors to provide feedback. So if you're looking to present or you have a founder that would love to pitch, like let's talk, and I'm happy to kind of, support us through this process, because what I think that this does is it gives us an ability to bring the community together and focus on founders that need that support. Like women, we need access to more capital, and I'm really proud of the community that we've been building from our last Women in AI conversation. So yeah, any kind of questions around DFX, if you want to drop them in the chat, we're happy to kind of answer any questions before we jump into the panel in around 9 minutes. The agenda for today is Jesse will be leading our first panel. We'll then be going into a little bit more of a series around our community leadership. And then we have a service provider spotlight. And then we'll be going into the final panel, which I will be moderating. And that will be an all-female panel. And then at the end, we'll be doing networking breakout rooms with Jesse and I. And so the breakout room structure, please stay to the end if you want to connect with folks that are inside of this summit. It's really impactful. We share what you're doing, where you're located, what referral would be best for you, and what referral you can give others. That's really how this ecosystem has been built, is Jesse's ability to give first. And a lot of people don't understand like why we aren't charging higher fees, and why don't we have, why aren't we, taking a piece of the transaction, and it just doesn't align with our ethos. And we just believe that capital should be available to everyone, and you shouldn't need to go to an alumni and, have a school to, network to be able to get funding. So, I'm really proud of us. We've come a long way in a very short period of time, and this is only the start. And big shout out to our marketing team who has put this all together today. And yeah, I see Daniela and Mika together, which is really cool.
Yeah, I noticed that too. Love that. Yeah, our team is globally diverse. We have people. So I'm in Boston, headquarters in Boston. Ella is in Boston, but she'll be moving to New York in August-September timeframe. So if you're in New York, definitely connect with her. We're a frequent frequently in New York, probably twice a month already. We have another great group in Atlanta. We have some people in Dallas, Austin, kind of spread out throughout the United States. And then globally, we have a very globally diverse team, a lot in South America, a lot in Eastern Asia, and a couple other areas. And certainly are looking to establish different leaders as well across the board. So if you're in any area that has a good amount of venture, private capital, or even not, if you're in an area that needs it, reach out to us, because we are always looking to partner, collaborate. A lot of our team members on the core team, they came in because they saw the mission, they saw exactly what we were looking to do, just like Ella's story about how she joined and how she saw, hey, if we can get this going, this is going to make a global improvement on the whole process of raising capital, and founders being able to focus on their business and not focus on so much of investor calls. So if this resonates with you, if you want to get involved, definitely do reach out to us. We are always looking to collaborate, always looking to bring people in. And then also there's just so many ways that symbiotically we can partner with different groups and help them, right? We have this network that's growing day by day. It's part of the business model internally, is with us having these economics that are just pretty much 99% less of what everybody else is charging. Our network grows every single day. So with more people coming in, that's more deals, more capital, more service providers. It just gets better and better and better and better every single day that we exist. And there's some people, we call them the OGs, that are part of the ecosystem, that remember when, there's a couple dozen people in here, and it was more of a reassurance. Hey, this is where we're taking this. This is the future. Trust me, we're going to get there. And, a year later, we're on this call with some amazing thought leaders that we're looking forward to having on these panels, and just really making the initial impact that I wanted to make. But I consider this inning number 2, essentially. Inning 1 was that first year. Now we're in inning 2. There's still a long game to be played, but we are winning the game already, and it's so nice to see so many great people involved in the mission, and really having things resonate with them. So that's where we're at. We'll give some of the panelists just a couple more minutes to come on. I see that some of them are already on. Most of them are. How this will work today. So I would recommend, first of all, we'll have some things dropping on LinkedIn. And you'll want to comment on these posts. I'm happy to pull up and basically ask questions. We have our marketing director, Kat, who will also be relaying me some of that. So if you could, during this call, if you have any questions, you have anything that you would like to hear from the panelists, put it on the LinkedIn post, because that also helps with just exposure, of course. And it's our marketing team has done a phenomenal job getting the word out on what we're doing. And then we have so many champions out there that have helped us spread it. So this is the kind of thing that allows us to provide the services we provide at such a extremely economical value, is that we have such a great community that's helping us generate new members, new traction, which will only help all of you, because more of your network will come in, their network will come in. It just helps everybody. And then in the chat on the Zoom, drop in your name, where you're located, your LinkedIn, what you're looking for. Yesterday we had the first day was real estate, and amazing group. There's a lot of connections made just right through the chat, and people commenting on each other, hey, I have somebody for that, and things like that. So definitely do that. Let me see what else. Okay, so we will, at the end of this day, we'll have a networking breakout session. So we'll cover this again during that time. Right now, though, I would suggest going to the Zoom setting area. It says view up in the top right corner. Go to multi-speaker. So this is a newer feature in Zoom. And essentially, you have your speaker version, you have your gallery version. This multi-speaker version basically highlights the people who are speaking. So it's almost a webinar style, but then also you can see everybody on the call. And we've really preferred this over webinars. I think that, we've hosted webinars in the past, and it's nice to be able to see everybody on the call. It's nice to be able to look them up on LinkedIn, chat, all of that kind of thing. So this is something that just gives more of a community vibe. Certainly would say to do that. And then let's see. So we'll start this panel off in a second. Let me just kind of pull up my notes, of course, over here. So what we're going to be talking about is really early stage capital, venture, angels, leveraging local ecosystems, red flags and green flags for founders and founder fundamentals, the impact of AI and how to leverage AI effectively, and also what venture investors and what angel investors look for in the resourcefulness of these early stage founders. These days, founders have so much at their fingertips. It's more about doing more with less than it is about trying to raise a large amount, right? If you can figure out how to do more with less, that kind of resourcefulness makes a huge impact on the investor mind. Certainly suggest that. And then relationship building versus transactional fundraising. In today's day and age, relationships are becoming more and more important. So with that, we will kick this off. I'll start to pull, let me just go like this real quick. Just multitasking. Here we go. So today's panel, the first one, as Ella mentioned, I will be moderating. The second one, Ella will be moderating. We have an incredible group of people on this call. I believe they are all on, but if they're not, we have plenty on this panel that we'll have a great conversation either way. First, I'd like to introduce Kevin Jurovich, who is the co-founder and CEO of Hubble. Kevin, if you could give a little bit about yourself, that'd be great.
Yeah. First of all, thanks for having me. It's 7:30 a.m. on the West Coast, so this is my first call of the day. Kudos to everybody for hopping on. I'm an early stage founder. Founded my first company 6 years ago. Been through a lot of trials and tribulations as any founder goes through, and part of kind of my mission as a human is just to help other founders. So anybody who's on this call, whether it's on this call or after, I'm always here. I want to help. I want to see all of us win. A little bit about Hubble. It's an expert marketplace that allows you to talk to VCs, founders to get the advice that you need, because from our view, nobody should have to go at it alone. So it's a little bit about me. And yeah, thanks, Jesse, for having me.
Thank you, Kevin. And personal endorsement of Kevin. I've had two calls with Kevin over the last month, and both of them have been incredibly impactful for myself and for DFX. So certainly suggest learning more about Hubble, learning more about Kevin. You'll learn more in this hour. But so happy to have you on this call, Kevin. Next, we'll go to Alejandro Martinez, who is the CEO of Propelling Tech, and he himself grew a company from 20 to 3,000 employees before an exit. Also a phenomenal person and just a great spirit. But Alejandro, I'll let you go through your background as well.
Thank you, Jesse, and thank you everyone for having me. Really on my side, I've been like 20 years on data and analytics and AI. I've been discovering kind of the entrepreneurship lately in the last 2 years, trying to leverage AI on everything that we do. Like basically even at Propelling Tech, we're trying to shift the market on how you use technology to leverage your own things. Kind of what Jesse was saying is how you can deliver more value and do more things with less. At the end, technology is there to help you. As Jesse was saying, even with DFX and kind of the complexity that they're solving is the same. Like if we look into every single technology that is out there, because it looks complex, like a lot of people think is out of access, but right now it is the opposite. Like I think just being smaller, you can compete with the big ones. So that's me. Same. You can reach me anytime. Happy. I always say I don't know everything, so I'm always looking to learn from people and just connect and network.
Thank you, Alejandro. And next we'll go to Brian Hollins, who is the managing partner of Collide Capital.
Hey,
I don't know.
Jesse.
Yeah, perfect.
Yeah, thanks for having me.
Yep, would love a little introduction, Brian.
Oh, sure. Hi everyone. I started a firm called Collide Capital. We invest pre-seed through Series A in what we call productivity software. So software that reduces waste or inefficiency in either your workforce or your enterprise. We focus in three main buckets. So we invest in fintech infrastructure, supply chain and logistics businesses, and then built a thesis around Gen Z in the workforce. So the tools that Gen Z will touch in 2035 as opposed to 2025 when they work at Goldman Sachs or Morgan Stanley. Really excited to be here. I've gotten a chance to learn more about the DFX network through meeting Jesse and Ella, and so happy to share my perspective on kind of how we think about ecosystem and network and why a platform like this can do really well.
Thank you, Brad. And next we have Mike Sherbakov, general partner of the Veteran Fund.
Awesome. Thanks, Jesse, Ella, and team. Thanks for putting this together. Mike Sherbakov, based in Austin, Texas now, after 20 years in San Diego. I was a United States Marine for 5 years, active duty. After my undergrad, spent 10 years as a startup founder, started and sold 2 companies in the health and wellness space. Started angel investing and did that for about a decade. Wanted to make sure I was good at deploying my own capital before I ever took anyone else's. 3 years ago, started the firm, the Veteran Fund, with my 3 incredible partners, and we invest in early stage veteran-led critical technology companies, check size 500K to 1.5 million. Built a personal equity portfolio of 100 plus startups right now, and I also started the Founder Institute program for Southern California and the veteran vertical. And if anyone's not familiar with that, it's the world's largest startup accelerator. So work with a lot of startups, look at a lot of startups, and always try to just be as helpful as possible. So excited to spend the next 45 minutes trying to share any things I may have learned, best practices, and hopefully help folks, whether they're founders or investors, in their journeys. Thanks for having me.
Thanks, Mike. And next we'll go to Raul Anand Singh. I believe he's on the call.
Yes, I am. So good morning, everyone. Thank you, Jesse, Ella, Kat, and Chloe for the kind invitation. My name is Raul Anand Singh. I'm a director at Founder Institute Caribbean. So shout out to Mike, my fellow colleague, working on developing the innovation ecosystem here in the region. And as Mike would have shared, we're the largest accelerator in the world, helping pre-seed startups launch, grow, and access capital. I'm also a VC resident at Venture Institute. And lastly, I'm a founder, currently building a Web3 fintech platform, helping tourism businesses to simplify their cross-border payments, leveraging stablecoin. So it's a pleasure to be here with you guys and hoping to learn as much as share my experiences.
And next we have, lastly, because Benjamin, I don't think was able to hop on, but we have Yusuf Rescala, who's local to my area, Boston, founder and general partner of the Genesis Fund. And Yusuf.
Yeah, sorry about that. My computer is just lagging. Thank you, DFX team, for having me. My name is Yusuf, originally from Cairo. Grew up most of my life in Dubai. Background, 2-time founder, failed miserably once, exited the second time, and then jumped on the dark side, the venture side, and microfund investing in student founders coming out of the Boston ecosystem, and dropouts, outlier talent, so on and so forth.
Yusuf is a very well connected within the universities around here, and somebody that we are collaborating with directly. So we're going to start this off with a couple of different questions that are about local ecosystems. So I'd like to start with Raul, actually. The Latin and Caribbean area is one that is still up and coming, right? So what are you recommending for those founders? How can they participate in the local ecosystem, and how do you support them in their efforts in basically getting their deals seed?
Yeah, really good question, Jesse. Thanks for that. So the region as a whole is slowly going through a transition period where we're evolving and slowly getting to the point where most developed markets are already at. So I'll paint a story using part of my personal experience and journey. As recent as 2022, with one of my technology startups, I was accepted into Techstars. The reason I had to apply to Techstars to begin with was because there was just a lack of opportunity and access here in the region. What that meant for me as a founder was leaving the Caribbean, moving to the US, and then possibly staying there. Now, had I chosen not to return, then that would have resulted in brain drain, capital flight, and a general loss for the region as a whole. Since 2022, what we're witnessing now is there are a plethora of island-centric business incubators, sort of venture studios building throughout the region, but they still remain very much fragmented, not just geographically, but politically as well. So what we need more of to attract outside VC is for the region as a whole to come together and present a single market. So that's my segue now into what I'm trying to do with Founder Institute. So we're on the cusp of launching our first region-wide accelerator to sort of bring everyone under one umbrella, give them access to opportunities, because by all means, there's no shortage of talent. We have an abundance of talent, but there's a shortage of access to the same opportunities that you would have in more developed markets. And resources that would include not just capital, but mentorship, right? Access to markets, access to technology. And those are some of the critical factors and building blocks that founders really need. I mean, Kevin Jurovich is on the panel, and I follow Kevin on LinkedIn. He's doing phenomenal work at Hubble. We don't have those opportunities, right, to connect. And oftentimes founders from the region as well, as simple things as they don't have a credit card, right? So how are these founders going to pay to access resources? So there's a lot that we need to do top down and bottom up to sort of help build the ecosystem. And I'm hoping to achieve some of that through Founder Institute. And of course, with ecosystem development players like yourself at DFX.
Thank you, Raul. That's perfect. And on the note of the local ecosystems, Alejandro, you just launched Tech New York Advocates, which there's a Tech Global Advocates group, and it's thousands of CEOs, founders, investors, and they do incredible work. I was fortunate enough to attend and participate in a panel in the launch of that with Alejandro. Alejandro, how do you see that community aspect? How has that helped your own journey? And also, you're very active in the New York ecosystem and global ecosystem. So we'd love to hear your thoughts on that community side.
So I think on the New York side, at the end, I don't know, kind of the Global Tech Advocates is aligned with the belief also on the effects. Like, meaning the power of networking, like when you put gates, like starting, I introduce you to this person and then I charge you, it starts putting barriers, even to people that don't know what they're going to receive. When you just let the things and the magic happen by people meeting each other, crossing ideas. I think one of the pieces, for example, also by coming from Latin America, that you face is markets are different. You cannot really copy and paste something that is working in US and say it will work in Latin America. But also, even for the market size, there are difficulties and barriers. So you need to look for different ways in order how to do it. If we look into the Global Tech Advocates, there are communities in Colombia, in Brazil, in Chile, meaning kind of unifying everything, and using networks like this, like Tech New York Advocates in New York, is helping funders just to grow their networks through other peers, basically. At the end, just by connecting and creating, hey, I want to get into the US market. I'm in Colombia. I want to grow. Who do I need to meet? Those type of networks that are open for free, non-for-profit, can help connect with the right funder, accelerators, with the right people locally in those markets. And that's kind of what we're trying, is how we create connections, how we create a dynamic community where we don't have the influence by a government or a company, or by putting money there by, hey, you need to pay 10,000 membership and just pray you're getting the value. No, just join, share ideas, meet people, and amplify the network value.
Excellent. And Kevin, on this note, so a lot of this is about opening access to individuals, opening access to ideas, opening access to capital. Kevin, you've done a phenomenal job in your current company with Hubble, basically making that accessible. So would love to hear your thoughts on that and how that access and really improving that access has shaped your journey.
Yeah, I would just say from my time, first of all, Raw, that's an incredible initiative, what you're doing. I love that. We should talk. Um, when I first started my first company, this is like before COVID, you actually had to meet investors face to face. Like that was kind of the norm. In this recent round that we raised just a couple months ago, I've actually never met any of my investors face to face. Like all of this stuff has happened over Zoom. And so I guess I just say that as an encouragement. I can't speak internationally, but at least in the US, you don't have to be from Silicon Valley anymore. You don't have to go to Sand Hill Road. When I first, 6 years ago, I moved to San Francisco from the South Bay, which is just Silicon Valley, the South Bay. I used to have to go to this cafe, and there was this cafe in San Francisco called Cafe Centro. And it's where all the VC founder meetings happened because I didn't know anybody. I'd have to sit in this cafe and eavesdrop in these meetings and literally write down when a VC would say their email, I'd write it down and I would send them cold emails after and saying, hey, I overheard you. I'm a startup founder. That's how we had to used to do this, right? Just a couple years ago. It's not the case anymore. And I don't, you can use platforms like Hubble. There's tons of investors on there. It doesn't even have to be our platform. I think investors are just more willing to meet founders where they are. If your product has traction, you know, if you're walking the walk, not just talking about it, there's a ton of money, a ton of different places, and they're just looking to back solid founders with good ideas. Yeah, that's what I would say has changed over the course of the last 6 or 7 years, which is really encouraging, right? You can be a founder from almost anywhere.
Well, thank you, Kevin. And so we're going to change gears to red flags and green flags that investors look for in early stage founders. We'll kick this off with Yusuf. So Yusuf, you are actively investing in, as you mentioned, college students, right? Some of these people are pre-seed, pre-seed in a sense with just an idea, right? They're very early stage. Some of them have a little traction. What would you say are your biggest red flags when you're speaking with some of these founders that have made you make a quick decision for it now?
Biggest red flag, I'm gonna drop out once I raise the pre-seed. I'm gonna join full-time once I raise the pre-seed, all that sort of stuff. At Genesis, we like to look at it at the normal distribution curve. On the right end of the spectrum is outlier talent, so computing Olympiads, math Olympiads, etc. On the left side of the tail is people with a huge chip on the shoulder from past trauma or experiences. And green flags to have a team, a CEO from the left side and the CTO from the right side. Red flags is people who are just have a safety net. So when I raise, I'll drop out. Just signals low confidence to investors that they don't have a sense of belief that they'll figure it out.
Interesting. And going to green flags, Mike Sherbakov, you're actively investing in vets. We have one of the leaders within the DFX ecosystem on our internal team is a veteran. I see all of the values, of course, in investing in these groups, but what kind of green flags do you see because of the great determination that these individuals have come out from the forces?
Yeah, I think it overlays onto kind of the veteran archetype, which we say is leadership, resilience, and purpose. But obviously, like beyond just the fund investments we make from like an angel investment portfolio, I look for those qualities in founders as well. I think every every investor, when they're making an investment, and in one way or another, looks at three things. They're looking at the team, they're looking at the product and the market, and you could also add product velocity, kind of how quickly they're iterating and improving. And then at the earliest stages, believe most investors probably over-index towards the team. You have to, right? Everyone says bet on the jockey, not the horse, because they could have a moat, a big, large defensibility in their product and what they're building. It could be a giant market, but at the early stage, you're really betting on, is this the team to execute? And for me, the green flag is every time I check in with them, do I have more or less confidence every time I speak with them? So we've done deals where I've met a founder at a dinner, and 2 weeks later, after fast tracking our diligence process, we're wiring funds. And there was another company, Aerofuse, we invested in, and it took us a year. And what I really appreciated about that interaction, and this speaks to the green flags, is over the course of the year, they continued to send us updates. I continue to see how consistent the founders were. I continue to see them iterating. I saw the product velocity. And to me, that is probably the best green flag, is consistency, staying true to their mission, having that leadership, resilience, and purpose to keep going that I talked about earlier. And if I eventually get across the line and our team and investment committee decides that we have enough confidence in this team, then we move forward with the investment.
Well, thank you, Mike. And Brian, you've actually given us great advice in our own capital raising journey, and would love to hear from you. Going back to the red flags for founders raising capital. What are some things that you see that small tweaks in their presentation, in how they actually communicate, make a large difference in their raise?
Yeah. I think if I had to boil it down to something, I'd call it attention to detail. I think it's very easy at the pre-seed and seed to spot differences of attention to detail that oftentimes persist as you start to build a relationship. And so it's one of the few things that I'll sort of spot check pretty early on. Are you spelling things wrong in your deck? If I go to your website, like, our words spelled wrong. If I try to schedule, a meeting with you and your co-founder, and you send it to me in PST instead of EST, I think that tends to persist across the way that you manage your employees, the way that you have attention to detail with your customers. Like, I think it tends to not be a thing that you only decide to do for me. And so I think I look at that pretty seriously. And I think that there's a lot of different ways that we get caught up in early momentum and early traction in businesses. And the reality is the difference between 25K and 300K of ARR in the grand scheme of things really isn't a lot. And so I try to not get too caught up in things that I'm being sold at the early stages, and instead look for things that I can uncover in kind of the behaviors of the founders.
Thank you, Brian. And on that note, so attention to detail in relationship building. This is just a funny story from my own personal journey. So I was working with the RIA that we were doing a lot of VC co-investment in with the SPVs. There was a group out here, and it was actually a fund that was raising, and they were this was their fund too, and they were taking us through their deck, and I noticed significant irregularities between the numbers. The numbers from one page to the next didn't really add up. And when you're going through a fund presentation, there's a lot of numbers, right? So when things start not adding up, it's a big deal. So I was the one in our company that raised the red flag and was very stern. No, we can't do business with this group. Now, fast forward 5 years, they've actually been very successful. That's fun. They were able to raise that capital. They've done well. And now, me being a founder in the Boston ecosystem, everybody is saying, oh, you should pitch this group. They'd be a perfect partner for you. And I am not able to pitch that group because I have personally destroyed that relationship by being too stern. And you could be stern. My communication to them was pretty direct on, why. And this goes back to the relationship building aspect. And this is a personal, learning situation where, hey, there's a way to communicate well when things aren't what you expect, because in the future, especially in this ecosystem, I mean, as many of you know, these founders become VCs and vice versa. There's VCs that want to become founders. Good luck, most of them, and good luck. I would love to see them all do that first, but it is a small ecosystem. Everybody does business with each other. It's part of why these community initiatives and things like that work so well, is because everybody is a relationship away from success, right? Everybody has somebody to introduce and provide value, but make sure that you're just building the right relationships and keeping things strong. From here, we're going to transition to leveraging AI and resourcefulness in early stage growth, which goes along very well with what a lot of people have already mentioned, including Mike. But right now, we're going to talk about Alejandro, because he has such a strong background in the AI side. Alejandro, what are some of the things that you look for when investing in an entrepreneur, and what do you like to see from the AI perspective?
So when, I don't know, one of the key things, and it goes to what the rest of the panelists were saying in terms of team, market, and people. On early stage, you of course focus on the people, and really I normally summarize as the story of the chicken and the pig, like meaning how committed you are with your idea, how willing you are to die with your idea. Like the chicken is just putting eggs, and she's not really dying. It's just there. I don't know if the idea doesn't work, she just leave. The pig is putting the bacon. So like meaning is dying there for the idea, and that's the piece that I get to people. Like there are no plan B. Like you need to feel that people will just blend into that. When we bring into AI, and I don't know, AI for everything. I mean, is on hype that is good, like because it becomes accessible to a lot of more people. We just saw, for example, Base 44 getting acquired by, I don't know, nearly 80 millions with a solo funder just doing vibe coding. So basically using LLMs to not do coding, but help accelerate the coding. So I always say, that's the good side. It also has a downside on leveraging AI. When you start using what I call keeping the pace or doing what someone else is doing, like I do this because this other company is doing, then that's the wrong use of technology, because you're just, for something that should be really strategic and give you a competitive advantage, you're just copy and pasting. It's like taking your PowerPoint out from a web and saying, I'm going to use the same PowerPoint with the same slides, the same look and feel. That's what a lot of people are doing in terms of using AI and leveraging technology in general. The piece that I recommend is to just understand what are your goals, what is your vision in general. Like you can be small, you can be a big company, and then align the technology to those objectives. In order to make it more, I don't know, let's say to the level of everyone, I always say, I mean, if you give me a restaurant, to me, I will look at from the technology angle, like how I can improve this restaurant by leveraging technology so I can increase productivity, how I can increase efficiency, how I can increase the flavors on every plate are the same. But it doesn't mean that that's the correct idea. Like maybe if you own that restaurant, what you want to have is a specific experience where you need people. Like you need people I don't know, the people joining and coming for a dinner just to say, hey, I like your, I don't know, like giving greetings. So that one won't happen with a robot, for example. So those type of things are key that you analyze and understand from your business. What are your business goals? Where those components where you can use technology, but don't use technology for using technology. One of the cases, for example, that I think is destroying the use of technology is the sales automation, like the cold calling kind of. I don't know, in the past, we were finding an email and literally we were doing research on that email, on that person, like, hey, I want to talk to you. We were making calls, even putting, I don't know, it was kind of dedicated. Now you just take a list of 1,000, 5,000 users, you just send a dummy message and then just wait to see if someone replies. And I always say it gets to the point that, I don't know, daily I get emails, people offering me AI to improve my operations in my company. It's like, it's the last thing you should be doing. You should be contacting me saying, hey, we work in the same field, like maybe we can share ideas or something, but don't tell me what I'm doing, basically, because then you're not really reading my profile. And I think that's what is bringing what I call back to basics, like community, like we have the technology access. We're looking into back to basics, like the communities, in order for us to network, because the technology that we created is creating spam, and is creating spam in emails, is creating spam on calls. It's the same. I mean, if you use technology, for example, to do a research, it will help you accelerate. So then you don't need to have a consulting company doing a research of the market. You can start the whole study just by doing that research, and then you can leverage and cross with experts or networks like what we're talking, but never just rely 100% on I don't know, I'm doing the research and I'm doing what the technology is saying, I'm creating this pipeline, I'm doing what the pipeline has created for us to automate. So for us, in general, I will say I'm looking for funders that are leveraging technology to minimize their operations. So meaning kind of what you, Jesse, were saying at the beginning is how you can deliver more with less from the investor perspective, like meaning that means that your runway is less and you can do more with the money you're getting from the VC or the angels, but also from the other way around. I mean, as a funder, you need to think you need as much as you can delay the entry of capital is better, because at the end you're keeping your autonomy and then you can get that money when you're proving your idea. Like meaning when you're getting current sales, so your valuation is going to be much higher than getting the capital at the very beginning.
Love it, love it. And that transitions well into a conversation we just had. And a lot of that, that outbound marketing, that's what DFX is trying to fix, right? In our space, there's just so many people that are using these services. They're emailing their deals out to thousands of investors, and it just inundates all the investors' mailboxes. And what it does is bottleneck the actual deployment of capital, because now all of these investors have full inboxes that they don't even want to check. And it crowds out the deal kind of environment. So that's why we have these calls, is everybody can meet each other, network, things like that, actually build relationships, as Alejandro was mentioning. That's the foundation of sales. That's the foundation of capital raising. You have to be able to connect on a personal level. So it just kind of takes me into this conversation we literally had yesterday with a group that's actually local to Boston. And this person was saying that they charge between $3,000 and $6,000 a month to founders, and they'll set up 30 investor calls within 90 days. It's all outbound marketing that they do for these groups. And what founders, I think, need to realize too is that you can have hundreds of calls with investors, but until you build a relationship with a couple, you're not really likely going to get any dollar of capital. So there are plenty of investors that take calls, right? VCs constantly are and somewhat braggadocious about how they say, okay, we spoke with 2,000 founders. This is a legitimate conversation I had recently. Spoke with 2,000 founders last year. They actually had 2,000 present to them in their group, and they invested in 3 of them. And that tells me a couple things, right? That tells me that you're wasting 1,997 people's time, right? Plus your own team. They're saying it very much in a bragging way, but clearly their filters to get to them to a call are wrong, and B, they have no respect for other people's time, right? And that's something that we as a community, we want to allow the faster building of relationships within this private capital ecosystem that allows for capital to move. So just something that certainly needs to be highlighted. I think those were phenomenal points, Alejandro. Yusuf, going to you. So on this AI kind of thought, you're tied into the MIT and Harvard ecosystem. Now, the students that are creating some of these applications and whatnot, a lot of them are leveraging significant AI. A lot of them are developing AI. This is all essentially pre-Y Combinator type of deal flow. Would love to hear your thoughts on this space and what you look for with these students.
So there's 2 types of founders in these 2 spaces: people who build it on the application layer and people who actually want to build the infrastructure layer. The application layer are just quickly forked off current LLMs that they make a website look pretty and then they go straight to the market. And then on the AI infra layer, it's a lot more technical. What we look in founders primarily is someone who is just brilliantly technical, like outlier technical. And we also look at somewhat of a cohesive and tight-knit team, high agency, and then somewhat of a competitive advantage, either through the technology that they developed, network effects, or like a founder-driven edge. And also a chip on the shoulder. But there's a lot of people now, especially college students, because of the vibe coding element, they just go on Cursor and over the weekend they whip up a company, and then they start going to market. They get some early traction, and they go ahead and raise. That's a common theme I've seen a lot of college students do, and the theme of dropping out has become in trend. A lot of these student founders going on Twitter, posting there, going viral. Within 2-3 weeks, they do 50K in MRR, for example, and then they drop out and then they try build a company. But we tend to focus more on the students who are actually building technology that's gonna cause innovation. So anything more on the infrastructure layer or something that's a lot more deeply technical, where you don't just vibe code something and just go and sell it and rely on your selling abilities.
Very, very interesting stuff. We should have another conversation about this because I'd love to dive in on a lot of that. But we don't have time on this one. So we'll transition from the AI side to relationship building versus transactional fundraising, because I think this section, the relationship building side, probably the most important for both founders and VCs. So we'll kick this off with Brian. We've had conversations where you went to Harvard Business School. You were talking to me about how you joined the Quinn, which is a social community out here. It's, a social club. And, you spent a lot of time there to meet investors, and now you're in New York, you're closing out your fund too. Would love to hear about your approach to building relationships and how valuable that's been, and also just how you've done it over the last couple of years.
Yeah, sure. I'd say very similar to a lot of founders that might be on this call that raise money. I also have to raise money. And so I've learned a lot as an emerging manager, as opposed to someone who sat at Lightspeed or Sequoia and just kind of wrote checks. So I'd say the fundraising journey is different in a few ways, but very similar in a lot of ways to how founders raise money. So I'd say one of the biggest differences is that it takes us about 18 months to close a fund, whereas traditionally it takes about 2 to 4 months for a founder to close, a pre-seed or seed round. And so from the jump, I look at relationship building as a very long-term game. When I show up to a first call with an LP, I never even in a million years would ever bring up anything that had to do with fundraising. If they ask me about it, I'll tell them, but I'm looking to spend as much time getting to know them as I can. And so I really enjoy spending time with founders who also take a similar approach, who meet me when they're not fundraising, who find time to get on my calendar for coffee as opposed to just an email. I've had a founder fly from Mexico City after we had a call from 8 to 10 p.m. and just jammed out on what he was building, fly to Mexico City the next morning and have breakfast with me. And so, there's unique things that show you that a founder's really looking to build a relationship with you and a partnership with you. I think a lot of founders don't really realize the arc of how long it takes to build a business. I think there's really good examples online of, things that got done in 3 years and things that got done in 5 years. But, if you actually knew how long Chime's been building, and you actually knew how long some of the companies that you're finally seeing IPO have been building, you'd realize that the people that you add around you right now, you should not only like, but you should really trust. And that the decisions you're making right now can have a big impact on your journey, because there's going to be a bunch of hard shit that happens, and you need to have people that actually believe in you and give you the capacity to kind of go do it. So I'd say just focusing on developing, deeper levels of trust as early as possible, and acknowledging kind of the length of the relationship that you're signing up for with that person, I think helps them realize that you understand what you both are kind of trying to do.
Such great insight. And speaking from experience, I mean, we've been on the hunt for a lead investor in DFX for a little while now. And, some of them we wanted, but it wasn't a fit for them. And sometimes they wanted, but wasn't fit for us. And interestingly, we recently, over the last month or two, met our lead investor, and he has built a relationship with our entire team that he's met, and has been just incredible piece of the puzzle of DFX, where he is a member of the team as much as he is an investor at this point. And it really comes back to building these relationships, right? We have relationships with all types of different capital providers, but having somebody that you actually connect with on the personal side, and they understand your journey, you understand their journey. These are things that have advanced that relationship so much faster.
Yeah.
It allowed them to be comfortable with coming in with a larger check, in our next round and whatnot. So
yeah, Jesse, let me add one more thing there, because I think you hit on it for me. Like, I also want to be clear that it's not it doesn't mean we have to get beers 5 times, right? I think of it as developing conviction.
Mhm.
So I think of it as that person slowly over time believing more and more in the thing that you're building.
Yeah.
That's kind of what I mean. And I think that goes both ways. You need to develop conviction in why they're the right investor for you. And to the extent that you can communicate that, I think it also increases the speed at which they're developing conviction.
And
So
let me just say something about that, Brian. That's spot on. Like one of the easiest ways for founders to do that is to start writing about your idea. Start writing about your progress. Start writing about like what your convictions are about a specific topic, right? And let's get that out into the universe. And what ends up happening is you end up connecting with these investors, right? They end up following you or you connect with them on LinkedIn. And what are you doing over time? You're building that trust and that conviction that you can push the ball forward, that you can execute on some of the things that you set out to do. So I just think about that in my journey. I'll tell a quick little story and then I know we got to hop to the next segment, but I wrote this piece on LinkedIn probably like a year and a half ago and it goes viral. It was about Uber's first investor and what his investment was worth at IPO. Okay. This thing gets like 10,000 likes. It's crazy. I'm looking through the comments and I'm like, who the heck is this guy? It has like 3,000 likes on this comment, right? I click on his name. I'm like, that's the guy I just wrote about. So his name was Mike Walsh. So a year and a half ago, right? We connect. Then we did exactly like what Brian just laid out. There was no pitching. It was just rapport building. It was very slow. I onboard him to be an expert. We talk about AI. One of the things that is making Hubble successful is actually not using AI at this point. We're doing all the stuff the old fashioned way. We're onboarding every single expert manually on calls like this, one on one. So I'm onboarding him as an expert in our first cohort that I've built conviction because he's seen my stuff over a course of a year, right? And we barely had any interactions. At the very end of the call, he goes, "Hey, are you fundraising?" You know, we had raised a little bit of money to that point, but the round was probably 50% taken. I go to sleep that night because I didn't brush him off, but I wasn't as maybe forward about yes, needing his investment as I should have been. I go to sleep that night and I'm like, dude, Kevin, you're an idiot. You got to get this guy in your cap table. This guy's awesome, right? I wake up the next morning and I'm getting ready to like message him and I have a DM in my inbox. And he's like, "Hey, pal," it's like straight out of Wall Street. He's like, "Hey, pal, I went in, you know," and he ends up wiring a significant investment 2 days later. So like, I guess that just underscores that, right? It's like you never know, you're building this relationship, and I was not even aware of it. I was not even aware as I was writing about this stuff and this mission and these things that we were after. We were building credibility in his eyes. And then when he had that moment to meet me to really hear about our mission and what we were building, the thing took place in 2 days, right? But it was a year and a half in the making.
It's a beautiful story, and it ties into also a lot of what Alejandro was saying about the outbound marketing and everything else, right? Instead of outbound marketing and jamming up everybody's inbox, I mean, I can tell you from personal experience, I'm sure almost everybody on this call, email wise, I only read the emails that I know the person at this point, and my inbox just inundated, right? But tools like LinkedIn and other areas, using them as your drip campaign in that sense. And people don't know what you're doing unless you actually put it out there. So don't be shy to share your experiences. People love that personal touch. And also, this is something that Kevin and I had talked about as well. Give, right? Give as much as you can and provide value, provide anything that's going to provide value to the reader. And that is what kind of goes viral to an extent. And then from there, you can start to develop these relationships. So it's so much better to focus your time on that kind of content than trying to email everybody in the space and inundate their mailbox. It's just a better use of your time. It'll gain much more respect from the community, allow you to develop relationships faster, and then obviously, do the personal touches and have the strong networking points. It really helps out a lot. And on that kind of relationship basis, Mike, so your background, you've done a lot in this veteran community, and now with the initiatives with the veteran founders with Founder Institute. Talk about how you're bridging the gap a bit between these different areas and these different ecosystems.
Yeah, thanks, Jesse. I actually just want to kind of double down on what Brian and Kevin just shared, because I do think it's not talked about enough, and I don't think it can be stressed enough. The importance of relationship building and doing it the right way. The thing I love about venture, and most of the day, if I'm not talking to other founders, I'm talking to other investors. And what I love and kind of what brings us all together is we're long on everything we do, right? Every investment we make, especially if we're investing at the early stage, we're betting on something that we want to see exist, 5, 10, 15 years from now. And we're making relationships that we want to have 5, 10, 15, 20 years from now, right? And the reason I say that is the general, not just business advice, but life advice is just be kind, be a good human. I say this on almost every panel that I speak on, not because you want something. And I understand that most founders, when they're in fundraising mode, it's this mindset of I have to close as quickly as possible. I have to talk to as many people as possible. It feels very transactional, but I'll just say this, and I know for the other investors on the call, the moment you feel that at an event and you're kind of getting bombarded and immediately someone wants something from you, or you jump on a call and they don't ask anything about you and they talk at you for 19 of the 20 minutes that we have on an intro call. Like, to me, these are not automatic no's, but these are giant red flags versus someone that wants to come in and build that relationship. And what I think everyone on the call can attest to this, founders become investors, investors become founders. People that you meet on this life journey kind of come back into your life 10 years from now. LPs that we had in our fund one, some of them 15 years ago, I met in a yoga class, and they said, hey, I met you 15 years ago and you were so nice back then. And by the way, I had this giant liquidity event. I want to be an LP. And so I'm telling people that not because you should be going into relationships thinking you want something from someone, but it's just good practice. And it also makes the world a better place when you're just a naturally kind human. So I know that didn't answer the question about veterans and bridging the gap and all that, because I just think this is way more important, is good advice for everyone. Be a good, kind human to everyone, whether you want or need something from them or not.
Yeah, I love that. I love that message. It's so true. And I think previous times were different, right? Where investors weren't as accessible in a sense. You didn't have as much of a choice of the strategic investor as you do these days. The whole ecosystem's being opened up in a capacity that's just never been opened up before, right? So founders have the ability to be more selective with what capital they accept. And I strongly encourage aligning both with the strategic capital and also make sure that strategic capital is we'll say nice capital. It's somebody that you respect, that respects you, that is going to do business the right way, right? Because these days in the venture space, especially, there are a lot of different terms and things that VCs can put in, and some do. And there's the horror stories of the founders that had $100 million exit and they received $1 million, from that, or $2 million from that, and everybody's cheering them on and thinking they had this massive exit, but in reality, they're back to work the next year or two. So I think that building that rapport, building that trust, them trusting you, and just putting good kind of energy out into the world, it makes such a difference with how you do business. It also is part of what has helped us, at DFX just spread so quickly. Is it's a fun community to be a part of, and I would love all of you who are on the call who aren't a part of it necessarily yet to join. We'll have one more question here.
Even Jesse, just if I can add, one of the pieces that I'm aligned with Mike is being authentic. Don't be two-faced. You need to be always the same person. One of the pieces before getting social media, that it was like the 6-degree connection. In networking, when you were learning networking 20 years ago, what it was said is everyone is important in your network, starting from a taxi driver to a hairdresser. Everyone becomes important in your network. You don't know who they know and how you can get connected. So if you go with what Mike was saying, just be authentic, be you, be nice human, be kind. You don't know how things can shift. And people can talk about you. Hey, this guy has a nice idea. You can invest. I don't know, even starting from a barber or hairdresser. So I encourage the same as Mike was saying. Is key even for the investors to put money to see that kind of energy because you're investing on an idea. So those type of things are the ones that are creating the dynamics on the team.
Thank you, Alejandro. And last question, we'll turn this over to Raul. We got 2 minutes. Would love to hear a bit about the relationship building you're doing to, again, bring a lot of exposure into the Latin and Caribbean markets.
Yeah, Jesse, thanks for that. It's been challenging to say the least, right? Being on an island in the middle of the ocean and then trying to do this, trying to network globally and across the region with the Americas. It's no easy feat. Slowly, though, as I shared early on, we're making some progress. So in each of the respective islands, there are pockets of activity. You would find an incubator starting up, a small accelerator starting up, government initiatives. Now, what is needed is someone to take that thread and sort of weave it all together so that as a region, we become a lot more attractive to capital, that we're one unified market. It doesn't make sense for a VC to invest in a founder who is only serving a market in Jamaica or in Trinidad or in Barbados. The population sizes are minuscule. As a region, though, we can start to tilt the scales a little bit. And then, of course, we need to embrace our neighbors. So a lot of the Caribbean are English speaking, and maybe because of language barriers, we've been afraid to enter the Latin American market. That is slowly changing. Now we find people using technology a lot more, so that if they aren't bilingual, they're able to communicate a lot more effectively. So we're actively building those bridges. So for example, with Founder Institute Caribbean, one of my partners is based in San Andres Island, which is Colombian. So we're actively going out there and ensuring that we create market access, that we build not just those bridges, but that there's a transfer of knowledge, of that expertise, of capital, right, of talent, and then ultimately enable us to become a lot more attractive to global VC.
Love it. Thank you so much, Raul. And now we'll turn it over to questions. So there's been a number of questions that have come in. I'm going to have Kat Mateus, our marketing director. Many of you in the DFX ecosystem know her well, I'm sure. Would love Kat to share some of those questions and for the panel to respond.
Yes. Hi, everyone. So we had Michael Yin ask to the group, what kind of red flags for identifying bad investors or vulture funds? Vulture funds.
I'm happy to take a shot at that. So vulture funds is that's a pretty harsh word. I know we don't like VC, everybody, but vulture funds, that's pretty tough. No, I think in general, the reality is, and I'll give YC a lot of credit for this, terms at the very early stage have been remarkably standardized versus even if you look a decade ago. The term sheets you got in the early 2000s looked way different than what founders get today and the protections that are available to founders today. So even internationally, I've seen really good standardization in LATAM, Cayman Sandwich. There's a bunch of tools there. I think what I would say is I would try to focus on making sure that in general, you're not the first of that type of investment for that investor. And so what I mean by that is if you're raising your pre-seed round, I would like to hear that they've made at least 5 pre-seed investments in their firm's history. They'll tell me a few things. One, it'll give me perspective on where they focus. And so you would it's good in general to be in the area of focus for the firm. It's where the most resources go. But second, it means that they actually understand the process of wiring you your money and getting you what you need, because unfortunately, sometimes investors sign up for things and then don't fulfill their capital calls. So that's something that I would and when they kind of ask, do you have any questions for me at the end or in the beginning, try to get a perspective on the types of investments that firm makes on a regular basis.
That's a great point. I'll just throw one thing out there too. and this is like the opposite of technical. It's just like treat this as almost your first meeting with an investor. Treat it almost like a first date, right? It's like almost when picking a co-founder, the same thing. Like, do I like talking to this person? Do I trust this person? Does this person see my company and the vision of it similarly to me? Are they getting as equally excited about the opportunity as I'm talking about it? Do they understand about it, right? Is this somebody that I want to work with for the next 10 plus years? That's like day one. You can, for me, within 5 minutes of a call, I kind of know already, like, okay, this is somebody that I like want to build with. And that's like a super easy, basic thing. Everybody can go into an investor meeting just kind of with that hat and with that perspective.
And I agree. It's kind of what Jesse was mentioning before. It's your strategic partner. So it is even you need to put more energy on the hiring of your investor. So at the same time that they're looking to see if they invest on you, you need to make sure that they are aligned with you. I mean, they are going to amplify you. You're putting money, but how they will help you with your go-to-market, how they will help you to grow and scale. Otherwise, like I mean, it is kind of what Kevin was saying is getting married is easy than nowadays to break up. Like breaking up from here is really difficult. Like I mean, you will have it for 10 years with you, and it can be painful. I mean, it could lead the whole idea just to break. So it is really important.
Yeah, I'll just add to that. In the Caribbean market, what I've been seeing is a lot of bad terms, or I would say unfair terms to the founders, but it's not because the VC is trying to take advantage of, or the investor, I should say, is trying to take advantage of the founder. It's more because they simply don't know better, right? So we don't have an investment class. We have high net worth individuals coming from primarily old money, right? So their families are wealthy, but we don't have angel investors. We don't have VCs. All of that is still a really nascent industry here. So the typical high net worth individual in the Caribbean wants to come in and he thinks, well, if you're worth zero, then if I give you a check for $1, then I own the pie. Now you work for me. So there's a lot of awareness and education that has to go on the investor side as much as it has to happen on the founder side. So we need to build the capacity of both sides of that equation in order for the ecosystem to grow.
Hey, Raul, if I can give just a small piece of advice there.
Sure.
I think as you start to think about this, it sounds like kind of all the groups coming together under sort of one unified umbrella from deal flow and investments perspective. To the extent that you can standardize the documentation for a pre-seed and seed round, I actually think you could build into the education of those investors by giving founders something to take to them when they talk about investing. And so if you guys don't have a standardized safe note or convertible note, whatever you think would be the preferred structure for the majority of investors there, and then actively give it out for free to put it in their mailboxes and tell them to use it anytime someone tells them that they want to give them money.
Yeah, that's exactly it, Brian. So we're now implementing processes like that, and then through FI's global network, all of that is already standardized. With YC's Safe Note, that's basically industry standard now.
Awesome.
But I guess to my point, it's just investors don't know, founders don't know. So before we even get to the point where an investor wants or is interested in investing, or a founder is seeking capital, that they need to be leveled up, skilled up a bit, Yeah.
Good luck.
Cheers, bro.
Awesome. Thank you so much. And then I had a question from Anna. I think this was directed to Brian, and I think the rest of the group can chime in. Any other red flags apart from attention to detail that you can share?
I'll jump in really quick and just say gaps in integrity. The moment trust is broken, I don't get it back. And I understand that founders want to tell a really convincing story. But if they're telling me something when I meet them in person, and then I jump on a call and they told me a number and it doesn't match revenue or customers, and then in our diligence process, this has happened a few times, we look under the hood and they say this was revenue, but it actually was for their service-based business and not their SaaS revenue. Now all of a sudden trust is broken. And the moment that that's broken, not only is it broken with me, other investors, we talk all the time. So have you looked at this deal? Have you talked to this founder? And again, this comes back to like being a kind, good human is like have that level of integrity. This kind of further validates our thesis of why we believe military veterans kind of possess these qualities of high integrity. But to me, I understand the desire to want to tell a really, great story, and we kind of over glamorize fundraising and all that. So the one thing that hasn't been mentioned that I think is really important to say, fundraising is not the goal, right? Building an incredible company that you deeply care about that brings value to a lot of people in the world, that is the goal. And so if you can do that without raising capital and certainly without bringing folks onto the cap table that are not values aligned and also kind of those good humans that you want to build with, be very intentional about that. But I just say maintain high integrity. Don't be ashamed of numbers. Don't be ashamed of what stage you're in. There are different investors for different stages of companies. That's why we have pre-seed and seed and Series A. We have milestone-based financing, and that's by design. So don't try to pretend traction and that's not there.
I think that's super well said. If anyone else has one, I don't have to give two. I know you guys all have red flags, so if anyone else wants to give one, go ahead.
I'm not an investor per se, but one of the things I see, it goes right with what Mike just said. Too many early stage founders, they think like, okay, I have this idea, I need to go raise money, right? It's like almost their first step. It's like I wake up in the morning, I drink my coffee, I have this idea, I raise capital, right? And when I see that, I'm like, this founder just doesn't get it, right? There's so many tools today to either throw up a wait list, show that the market kind of wants something, show that the train is leaving the station somewhat, right? There's a lot of things that can be done well before raising money and well before seeking to raise capital. And when I see that, it's just kind of a classic, well, this person will learn, but they just kind of don't get it right now.
So on point, Kevin, just a couple of weeks ago, I had a conversation with a founder. He's building a marketplace to connect hoteliers with gig economy workers. And he came to me with the idea and immediately asked for money. So after an hour conversation, I'm like, dude, you can do this with WhatsApp and Google Sheets, right? You need to be the connector right now. You need to do all of this manual, offer the service, start generating revenue before you even think about raising. So to your point, Kevin, spot on.
And even I don't remember it was Mike or Brian who were mentioning before like you're building a rapport, you're building the connection with the person. The moment you get doubts, it's done. Like meaning for an investor, if you get doubts on a funder, you just stop there. So like meaning be authentic, don't fake it. Like don't try to fake numbers and try to fake traction. Like just be transparent and treat it as a partner you're onboarding, because that transparency is going to help you build for real. Like don't try kind of what Mike was saying, try to say you're at this level when you're in a different level, because that won't work.
Awesome, thank you. And then one last question. What's one underrated local resource in emerging markets that founders should leverage first?
DFX.
I think
Uh,
academia, like the
Sorry.
universities, college, all that, I don't think it is well leveraged. Not even in the US. Like I don't know. Like I was having that conversation with Princeton University, and for example, a lot of funders don't use it. But if we go to emerging countries, it happens the same.
Yeah, I echo that point, Alejandro, because in this region, governments offer a lot of free resources to founders. There are a lot of grants, a lot of free programs that are available. I think as a society, we become very lazy in our approach. So it's easier to ask someone for money than it is to put in real effort. And I think that ultimately is what is going to make the difference between a successful founder and one who isn't, right? You need to demonstrate that you're willing to invest in yourself, put in the effort to grow and scale versus just coming and asking for a blank check at the start. But But yeah, public sector has a lot of resources out there.
I'm happy to add one more. I think for me, I'd say co-working spaces. So one of the things that I think you don't feel when you're not in San Francisco or New York is just the sheer density of really smart people around you building really innovative things really fast. And so if you know that you're in, you know, an emerging market where that same ecosystem doesn't thrive, then I would look for all the spaces where there's basically a sign on the door that says, if you're building something or thinking about something interesting, come work here. And so, you know, Mexico City, Colombia, I've been down and seen some of these incredible, first of all, they're just beautiful, you know, places to work out of. But second, really smart people start to aggregate, and you can find co-founders that way. If one company starts to not work, you can merge them, and all of a sudden you actually have a company. I've seen a lot of interesting stuff happen in co-working spaces.
Not to plug LinkedIn too much, but no matter where you're from, like LinkedIn is global. There's people all over the world, right? Get your ideas out there. Start writing about them. Start writing about some convictions that you have or some wins that your company is experiencing. And Jesse kind of talked on this earlier, but as we post, and this is a topic for maybe another day, but as we post, think about it as for your audience. I'm here to either educate them or inspire them about something. And this allows for, you could be in Timbuktu, you could be in West Virginia somewhere, or somewhere in Latin America or Australia. The whole world can see these ideas. And it just opens a wide net to attract the right people to help you on your journey.
Thank you so much for everybody who participated in the panel. Jesse, I'll send it back to you.
Yeah. Again, thank you, Kevin, Alejandro, Brian, Mike, Raul, Yusuf. You've all set the stage for this second panel that we'll cover in a half hour or so. For the next half hour, we're just going to talk a little bit about the DFX ecosystem internally, some of the relationship building abilities that you all have, and then we'll highlight a little bit of the community as well. We have some people on here that are, you know, fundamental members. So
Really quick, Jesse, can
yeah.
I just say I got to run?
Yeah.
Anybody who's been on this call, if you want to connect with me on LinkedIn, please do. I'm happy to help. Just put a little note that you were on the call so I can see it. And thank you so much for having me.
Same on my side. Like, I don't know. Use LinkedIn.
Yeah. No, thank you guys. And yeah, all of these people, as you can see throughout this hour, they're very communicative. They're very much experts in their space, and they're also just those kind, nice people that you want to do business with. So certainly recommend reaching out to them. And we'll be highlighting them throughout our marketing campaigns over the next couple of weeks, highlighting some of the expertise that they've for us over the last hour. And just want to again thank them and thank all of you for participating in the questions that you asked. And now transitioning to this kind of DFX community and what we're doing, there's a lot of ways to get involved. So I think the biggest thing to know about DFX is that it's not just a platform. The platform is just one piece of the puzzle. It allows deals to be found a lot faster, of course. But really, as you could see just from this call, it's this global community of thought leaders, of founders, of investors, and we're really looking to make it so that everybody can access who they need and what they need in a faster capacity. So I would recommend all of you subscribing to our calendar, at least taking a look at it. Somebody can drop this in the chat. We have a lot of events coming up. So we were just down in Tech Week Atlanta 2 weeks ago or so. That was just a phenomenal event. I was down there with some of the team. This calls more for accredited investors. Can't really speak on that, but if you are one, take a look at that, ask us about that. This networking power hour, we have these calls every week or two. The summer we're doing them a little bit lighter just because everybody has, you know, things going on in the summer. But once the fall rolls around, it'll be every week again. And these networking power hours, so much business gets done on these, and it really highlights the strength of our community. As you jump on, you give a little bit about yourself, your background, your company, what would be a good referral for you, and what would be a good referral from to our community, or what you can provide to the community. And what happens is everybody on the call goes into the chat and starts connecting you to people over, LinkedIn and whatnot. And these calls have led to significant business, have led to investment. And I would just encourage everybody to attend these calls because they're some of the most valuable pieces of our puzzle that we're building, right? This global connections call, this is more for high level CEOs, investors that are global and have a global reach. Definitely a great group on those calls as well. We'll be doing a New York Tech Week Reconnect. So even if we didn't meet with you in New York during Tech Week, we'd love to have you on that call, bring everybody back together. Tech Week in general is crazy. New York Tech Week is another level. I was fortunate enough to only go for the last 2 days. Co-founder Ella was down there all week, and I barely saw her the last 2 days because the first couple days got the best of her. So I certainly recommend hopping on that call as well, because now that everything's cooled down a little bit and you can refresh and re-engage in those conversations after meeting thousands of people during that week, or hundreds at least, it just makes it a lot easier. Other than that, we have this European real estate pitch tank. Jaime, who was moderating the panel yesterday, will be the one moderating that. There'll be some great global investors on that call. We also have this women in health tech pitch tank coming up. So we do, as Ella mentioned, we have also a Hispanic one coming up. We like to highlight areas that have significant innovation, but maybe are underrepresented in the whole investor space. So Ella hosted a woman in AI pitch tank a couple of, probably 2 weeks ago. Had 200 something people register for that as a reverse pitch from VCs, and then founders pitch those VCs. It was a phenomenal call. And then conversation actually ran long after, and it was just a lot of great people sharing their experiences and connecting and everything else. So certainly recommend getting involved in this kind of atmosphere where it's just a lot of learning, a lot of expertise, a lot of connecting. These are what really drive things forward, and what really set DFX apart from maybe other platforms where you have your CrowdStreets of the world, your AngelLists of the world, whatnot. But ours is more of a community focus, a network focus, a relationship building focus. It's very much less transactional. The way I see it, almost all investment happens when you've built the relationship over time. So yeah, you might meet someone in our ecosystem, you might have engagements on your deal. Likely you're going to have to build a relationship with those people over time to then get an investment from them. And that just makes the whole process better, right? You want incentives aligned. Founders should also be thinking about the investor, what is best for the investor, things like that. It's not just all about this transactional basis, which I've seen too many groups kind of lean into over the last couple of years. I think it's just a product of the environment. But that's some of the things we are doing. Now, we do have a couple of people on this call that are from our ecosystem, and I want to make sure, let me just pull this up here. So this is actually one of them I'd like to highlight, which would be Andy Karuza. Andy, if you could give a little bit about yourself, about what you do in the space, your participation in our networking calls, that would be great.
Yeah, absolutely. It's great to meet everybody. My name's Andy Karuza. I'm the head of marketing at Nacho Nacho, and I help founders promote and sell their software products in our marketplace to over 300,000 businesses.
Excellent. And just give a little bit about your background, and also just the DFX community would be a great thing to talk about.
Yeah, I mean, I love what you guys are building here, and I've mentioned that repeatedly to your team because the word authenticity comes to mind, and I've heard other people mention that as well on this call. So I think we're all kind of in alignment there. When I first came across your guys' company and your community, every team member that I met was very authentic to me. And I see what you guys are doing here with this event, building really something that's for everybody else, bringing people together that can share ideas, and really feel like they're a part of something and they have something to get out of this community. So I think by facilitating that alone, I think you guys really know what you're doing here and see a really good, strong future for what you guys are building.
Appreciate that. And just give a little insight on the networking events and things like that as well, because I know you're on most of them.
Yeah, I've been starting to join a lot more of them, but I think like minds attract each other. So, hence why a lot of people are here today. If you ask yourself why you're here today, I think the answer becomes very clear. People want to meet other like-minded people. They want to challenge themselves and learn new ideas and grow their businesses ultimately. But I don't think really anybody's here today to sell. I think everybody's here for the purpose of connecting with people and developing meaningful relationships, which is another thing that I've heard repeatedly from people on this call, is that if you want to win long-term in the business, we're really in the people business. We're not really in the technology business. So I think everybody gets that here, that technology is just an interface. But at the end of the day, we're working with people, building relationships, and that's really what's going to define our success.
Excellent, excellent. Thank you, Andy. And then just a little bit about some DFX initiatives that we have going on. Obviously, I talked a little bit about 2.0 earlier. For those who attended the call late, we are building a second version of our platform. So the first version we released in March of last year. We've got about 600 deals live on the platform right now. We're raising capital, some deals closing that are quite large. A lot of excitement around a couple of things. But we are building a much better version that we're going to release in October. The UX UI is phenomenal on this new one. Highlighted it a bit before. Actually can just really quickly, let me see what I have pulled up. Yeah, so obviously, I'll run through this a little bit faster just because we've already done it, but this is kind of what it's going to look like. You'll have your local communities, you'll have your different networks that you'll be able to be a part of. When you explore the map, it's going to look something like this. You'll be able to click in, zoom into the different types of deals, the people all over the world you'll be able to connect with. So we're going to make it up. What we're looking to do is make the world much smaller in a sense, right? We're looking to put people who are like-minded in the same room and able to do business and do deals together, whether they're based in the United States or if they're based in India or if they're based in South America. Bring all these people together, right? People are looking to do business globally. So this will be a great feature and functionality. There's going to be a lot of relationship building that is essentially built into the platform. And then also, as we launch the second version, DFX itself will start to put together cohorts. So these cohorts, this is going to be more for early stage groups that are looking to raise capital. We're going to help kind of shepherd them along the way, make sure that they're ready to raise capital, make sure that they are a good fit. And by building this global network, and we're already a year plus into it, but by that kind of second year mark, we will have such just a great network as we already do of capital providers that those coming out of these cohorts, we're going to know exactly who to put them in front of, and we'll make sure that we do that, right? So very excited to kind of kick all of that off. We're leaning on a lot of different groups in that capacity. We'll be collaborating with a lot of the accelerators out there because of our approach to partnership and just the foundations of relationships that we use to build this out. So certainly encourage everybody to kind of tune along with that. We'll be launching an initiative on that likely later this year to kick that off. And then as we continue to develop it, it'll become more and more of a repeatable part of our ecosystem. We'll also be launching a lot of pieces on education, both for founders, but also investors. Raul was highlighting earlier how investors in the Caribbean maybe don't understand the whole investment ecosystem for angels in early stage, right? There are so many people who are now capable of becoming angel investors, and the angel investor space has opened up significantly over the last couple of years. Obviously, there have been a number of exits. The market's doing well. People are flush with capital in a couple of different senses, and more people are looking to private investments and less in public investments. So the angel space is one that's growing exponentially. It's one that we see angels and family offices deploying more and more capital to early stage companies, and VCs have tended to go upstream. So good VCs that maybe launched funds over the last 5 to 10 years. What happens with the VC ecosystem is you have these great VCs. They launch a say $20 million fund one. Some of them are as small as say 10 million, but we'll say 20 million this example. They have success. They have early success. They write some checks. Those companies do well. Now they're able to market this track record, right, for fund two. Now, on the VC model, typically it's a 2 and 20 model, meaning they're taking 2% of committed capital per year as their basically annual recurring revenue, and then they're taking 20% carry on the investment. So after the after the investments return to the investors, they take 20% of the profits. Now that model, when you launch Fund 1, VCs who launch Fund 1, it is that founder grind that Brian alluded to too. He's raising capital. It's a longer term to raise capital for funds. VCs have some of the shared experiences of founders in that capital raising process. But when you launch Fund 1, even if you raise $20 million, that 2% is only $400K, and you have employees to pay, you have platforms to pay, expenses to pay. It doesn't leave you with a lot, right? So then when you have success early on, you think, okay, well, if I raise 100 million in Fund 2, I'm going to 5x my annual recurring revenue. What founder would not want to 5x their annual recurring revenue? But what happens then is your Fund 2 at 100 million means that you're not writing these pre-seed seed checks, because you need to write larger checks. You don't want a portfolio of 100 companies or 200 companies. You want a portfolio of 20 to 40. So you start to write bigger checks, which means you have to go upstream. You start to go to Series A, Series B, Series C. And so you have all of these active, good, successful early stage VCs that now have left that ecosystem and gone upstream, but they're still marketing themselves to a degree as these early stage companies. So a lot of founders think their best bet is to contact all of these VCs and set up meetings and do all of this. In reality, you're going after the hardest capital because VCs are seeing so much more deals than your local angel network. And they're much more selective in what they see, right? So VCs typically are very niche down in what they're looking at. So if you think you have a great idea and you have traction and you're pitching them, guess what? They're being pitched by great ideas with traction that are extremely similar to your company every single day. So you are competing with yourself in companies very similar to yours every single day. Whereas if you go to your local angel, they're, whether it's an individual or a network, they're not seeing that kind of deal flow. You're able to build better rapport with them because a lot of them are just more looking to get involved more so in the private capital space, and they can learn from as much from you as you can from them. So from what we've seen in general, also DFX in our capital raising journey, angels, family offices, we'll talk about angels right now. Angels have been such a big component of success for us because we haven't had to raise a lot along the way, and now we're getting our institutional investor now. Build those relationships, build relationships with local angel groups, local angel investors, go to local events. They are such faster check writers. Their due diligence process is pretty straightforward. If they build a relationship with you and they like your idea, you can often raise capital from them. They become great champions. They're not as involved in the overall process. Their terms are, you can give them a Y Combinator style safe, and that is what everybody expects these days. So that's just a significant recommendation, is maybe don't go after the VCs so early. Start to build relationships with the VCs, right? I think we just heard from a couple that were talking about that. Build the relationship over time. And if the time you want to approach a VC is when you don't need their money. That's number one. They are a mentality. It's a very much, it's partly herd mentality and partly relationship mentality, where you're most desirable when you're unavailable in a sense, right? And that herd mentality is once you get one in, the others will follow. So build the relationship, build the trust of one, have those conversations at the right time. Don't have them too early. And if you can have them at the right time, then you can attract even more institutional capital. So that's on that side. On the family office side, the last couple minutes, family offices talked about a bit yesterday. Every family office is different from the last. So it's not like VC firms. VC firms are very much straightforward in what they typically are looking for. If it's a SaaS VC, they're looking at certain metrics. If it's a, prop tech VC, they're looking at certain metrics. Now, on the family office side, every family made their money in a different way. And that goes back to the roots of the family office. That's something that you want to discover in your conversations with them. Family offices are incredibly relationship based. They've also been pitched by hundreds of similar ideas to yours. So it's not so much your idea, it's you as a person, it's the relationship you can build with them, it's the trust you can build with them. Family offices, because they have all different histories, right? One might have made their money in real estate 10 generations ago. One might be a first-time founder who had a massive exit and now set up his family office and wants to help tech companies. Learn about their backgrounds, learn about what drives them, learn about what their impact, what impact do they want to make, right? Most of them are in a position where it's more so about impact. It's about doing things that allow them to feel like they are making some sort of improvement in their surroundings. And most of them are really good people. Sometimes they get a bad rep because, they've succeeded in a sense. And a lot of them just want that human connection because so many people see them as a dollar sign, right? So build those relationships, build those foundations, and you can really drive some things forward. I'm going to turn this over to Ella for now, and her panel's coming up in about 5 minutes. But I'll let her conclude this kind of conversation, and then Ella, you can take it from here.
Thanks, Jesse. What an incredible panel one. I feel like that was really impactful, both from a founder and an investor point of view. So thank you guys all for the chat box. I want to see this momentum for our next panel. I think what I'm really passionate about is building a community for underrepresented founders, whether that's female, LGBTQ, or Hispanic. I'm Australian. I'm definitely one that is an advocate for connecting people. So throughout this talk, I would love to see you dropping some questions for these panelists. We have some incredible female leaders that are joining this next panel. And one part of that is DFX. We're not just about capital, we're supporting community. And so community leadership is something that has been very critical in our expansion internationally, is finding these right experts that are within their sector, like Jaime Luck. If you were on yesterday's panel, you would have seen Jaime's network on the call, but also his pedigree of what he understands in the real estate market inside of Europe is incredible. And we wouldn't be able to expand to Europe at this early stage if it wasn't for community leaders like Jaime. So I would love for you to reach out, whether it's to Kat or Mika or Ben, anyone in the chat of the DFX team, if you want to learn more about our community initiatives. We run a global connections call. I'm pretty sure Jesse mentioned that. And that's for leaders to come in and meet our current leaders. We have a gentleman named Alex who is leading our African network expansion. He's got a $100 million fund that he's actively deploying inside of Africa. So we have people all around the world that they believe in making capital more efficient and more affordable. So yeah, that's one part of what I wanted to kind of jump into. And then the other part is I would love for you to reach out to me, whether it's on LinkedIn or in this chat box or via email, of what events do you want to see from us, or drop it in the chat now, because we're about to go into a Q3 planning. And I think what's really exciting about us at DFX is we have the ability to really focus in on what you'd like to hear from different experts, from different pitch tanks, from different investors. So would love to kind of learn more about, your guys' needs, and excited to kind of, hopefully see you all on our networking power hour, so we can, build more relationships within private capital. So without further ado, we're going to kind of jump into what is this panel all about? And I'm very honored to have these women I look up to. We have an advisor, a DFX advisor, who is on the panel today. She's an incredible, she's incredible with go-to-market strategies, Akita. And what we're going to be going through is 4 key themes. So investor readiness, storytelling, building rapport, and the founder journey. I think, if you're a female founder on this call, it's very, sometimes we get put in rooms and it's we're pitching ourselves to men. And so I want to go through that founder journey and how these women have paved the way for us and what they've learned along their own journey. So this panel brings together visionary women who built companies, backed bold ideas, and have built incredible ecosystems. And I would love to kick it off with an introduction from Alice Lau, who is the founder and CEO of AL Advisory. Alice.
Hello, Ella. Hello, everyone. Lovely to be here. Just a little bit of short introduction. I'm the founder and CEO of AL Advisory, as Ella just spoken, where I have the privilege really to work with over 300 different brands globally. And I'm also chief executive in artificial intelligence, construction tech, broad advisor on Web3, real estate development, and hospitality. And last but not least, I'm also the author of the book called Startup from Zero to Exit, where I wrote about a practical guidebook for founders, operators to navigate a complexity journey of building, scaling, and exiting a company. So happy to be here and look forward to today's discussion.
Alice is based out of Dubai and had a lot of global experience. So if there's anyone that is in Dubai, I definitely recommend reaching out to Alice. Thank you for being here today. And
Thank you, Ella.
Jennifer Geronimo, who is the CEO of Gangels, and we got to spend a lot of time together during New York Tech Week. How are you, Jennifer?
I am doing great. And thank you so much for having me. So super excited to be here and have this discussion. I think it's important. A little bit about me. I actually spent the better part of my career in the public market, so banking. So I don't like, about 20 plus years. I don't like to age myself. But the last 19 being at JP Morgan before I joined Gangels in August of 2021. And why I joined Angels and a little bit about us is we're on a mission to show the world that accessibility and representation in venture capital leads to positive returns. And how we do that is we invest at scale. So we have deployed $996 million across 2,700 companies. We're about to hit $1 billion, I would hope, in July. At scale, so we invest at scale with the best. So we never lead around. We co-invest alongside like top VCs. So I've done over 40 deals with Sequoia. I've done over 80 deals with Greycroft. General Catalyst will tell you where they're, number one co-investor through a community that measurably impacts diversity. And what that means is 65% of my members are diverse, 50% of my dollars are diverse. And so what Gangels is providing our, largely diverse membership is access to really great deal flow. I would say that's our number one sweet spot. Is I think we're probably the best deal flow that an angel investor can get. And then the second, we're accessible. So to invest in one of my SPVs, like directly, is, $1,000 minimum. So, when you think about diverse folks, they weren't necessarily in this industry 10 years ago. And when they were, it was more angel rounds. And when you think about that they're likely not playing with house money. And so, they may have a limited budget, but because venture is very much a numbers game, Gangels allows somebody to take as little as a $25,000 budget, invest in 25 companies, because we know that, venture is like, we can expect 5% to hit, maybe 5% to be of our investments to be flat, a little up, a little down, and then the rest probably will fall. And so, it's really important to think about volume and, being able to build a portfolio. And that's what Angels provides. And then we also have just a phenomenal community of 5,000 members. We have venture partners across, the entire venture ecosystem. And we hold over 70 in-person events and over 100 virtual events. So that's just a little bit about us.
I love it. Jennifer also has a program called Wave for women who are wanting to learn more about venture. So thank you, Jennifer. I really appreciate you being on the call.
Thank you.
Next up, we have Archita Fritz, who is a growth strategist at Ready, Set, Bold, and a board member for several companies, including DFX. It's the afternoon in Europe. How are you, Archita?
Hey, Ella, and look at that. You said my name so well. You didn't have to stress about it at all. I'm doing well. I'm so glad to be here. I'm in Dusseldorf, Germany, for folks on the call. And just loved hearing what Jennifer and Alice had to share. I spent over 2 decades in med device and med tech for a Fortune 500 company across engineering, quality, and a lot of build and buy decisions and marketing. And so 3 years ago, I stepped into the private equity space and the VC space. It was a huge change and shift. I was on the other side of, making deals and buying companies. And now I was on the other side of like, hey, how do we get the company ready to be able to, go to PE? And so my focus is working with founders to get ready for a PE exit, and then following a private equity acquisition in the first 18 months or in the 5 to 7 year cliff. I work with CEOs and founders from a go-to-market standpoint to get their sales motions in order. I do sit on a few different boards, and I really am very focused on helping raise the voice, help drive fundraising for female-founded startups, scale-ups, and CEOs. I also have a podcast, Embracing Only, which is all focused on, the first, the few, the only, and how we all have an opportunity to thrive in spite of it all. So that's me.
Yes. And you know what I loved is like when we were getting to know each other, you were like, I really want to make sure that, you don't burn out. And I was like, oh, that's so sweet. I feel like one of the things that I learned from my first exit is that burnout is a real thing. And I think us as females that try to do it all, everyone's like nodding their head, is like, we have to make sure to take care of ourselves first. And I'm really excited to dive into that further on today's panel. Last but not least, we have Sabrina Runback, who is a clinician and also a venture partner at Pulse Point Path. And we've gotten to know each other over the last couple of months, and we're actually co-hosting a health tech pitch tank together for female founders. Sabrina, how are you today?
Hello, Ella. I'm so great to be on the panel with all the amazing powerhouse of women here. I'm the co-founder of Pulse Point Paths. We are a 12-seat advisor board, empowering health tech founder to really scale with precision. I'm also a venture partner at MedStart Capital, backing mission-driven startups in the space of C to Series A and beyond. Really, what I stepped into building Pulse Point Paths is that we realize everyone has troubles when it comes to what I want. And then when they are clarifying what their goals and want, they're actually missing on the diagnostic of the reason for stalling. And that's because we're so used to thinking problems in these 1 or 2 dimensional way. And we are wanting to take into that multi-dimensional of operation, psychology, energetic strategy, relationship into who we are for viable, sustainable, and scalability. And my background is cardiothoracic surgery. I still practice a little bit because I feel like that's the reality of what I got into medicine, is those precision of resources. But at the same time, a lot of moments, we feel like we're doing surgery with plastic knives instead of scalpels. And because many resources are too many resources out there, people start to get overwhelmed when you start talking about burnout. How do you decipher what is it, the exact part to make your incision? And how do you then fix things as you go and have the trust and ability to have the right ecosystem to support you? So I think that's when we start looking into that 5-dimensional way of many people are building on that, what do we say, a nexus core, right? That business ecosystem. But what we are missing is we start losing our personal ecosystem. We start forgetting that there is a family ecosystem, their dreams of what they want to do. And even though we are building an empire to support them, but if there's a disconnect, what are we actually doing? And then the two more, it's very skillful for all of us that people do pay attention, is your mentor ecosystem. Right? How do you grow and get the right advices and not constantly asking for help, but then get overwhelmed on what to do, right? Take that right action for. And then lastly is the partnership ecosystem. That passive referral doesn't work. How do you really truly create those collaborative win-win, right? Ella and I were talking about our pitch event is because we're not just putting people on stage. Oh, let's give you some visibility, go for it. We want to be very intentional about preparing, having the right persuasive language. And that's when we start seeing our portfolio company as partners, as how do we invest to win together? And that's where I bring in my background from public health, neuroscience, really, and the creative side of music and dance, what I used to do before, and go into this scaling healthcare innovation that are not always for funding. Because at the end of the day, we need funding to grow. Right? So if we can really focusing on the right growth strategy, then it's not always chasing funding, then put our mindset in that I'm not enough. I don't have enough to even do what I do. And it's really about taking the founders to get ready to lead from every layer.
Thank you, Sabrina. I know that it's been an early morning for you, I appreciate you jumping in. Jennifer, you see many deals come across your desk daily. How has the bar for investor readiness shifted over the past few years?
Okay, so, let's just go through a little history, right? So when we were thinking about between like 2018, 2019, right, we were seeing companies raise that go from Series seed to Series A in around 12 to 18 months, right? And we've since seen that now really get extended, right? So now folks are not doing that next round for another 18 to 24 months, sometimes even longer. Now, some of the reason for that is, and then if another little historic, in 2021, venture was hot and valuations were high. And even back at Gangels, portfolio companies could actually tell us, listen, I don't want you to say our name until people actually tell you they're highly interested. And so we could just send out some high level information to our members and they're like, yep, interested. And so just people were throwing money at venture. Since then, I think we've learned there was the venture downturn in, the second half of 2022 that's gone all the way through to 2023. And investors are starting to notice a couple of things. 2021, they were throwing a little too much money too fast at some of these companies, and the valuations were too high. And so now they're being a lot more thoughtful and do.
Did we lose Jennifer?
Yeah, I think so. She might have a bit of lag on her connection.
That's okay, Ella. One of us can
Doing a lot more diligence around. The other thing is because some people are being back.
No, you're good.
Okay, sorry. And I know. So I was saying we've extended those timetables, which is now holding up on people's liquidity. We always said 7 to 10 years. That now, liquidity could take even a little bit longer, right, in the venture landscape. So I think you see people, because of the economic downturns, geopolitical, because of how long they're tying up their money. Money, you know, because you're hearing a lot more no's than you were hearing back in 2021. I hope my sound was okay. I don't know what's going on, but
No, we ended up getting most of it. It was so funny though. You were dropping a gem and then it would pause. But I totally agree. The landscape has changed so much in the last few years. And Alice, I'm really curious, what signals do investors look for before the traction and the revenue is present that you've been seeing?
Yeah, definitely. I think this is a very, very crucial question nowadays. And from my experience, also my journey supporting so many different businesses across industry, I think before there's a revenue or even solid traction, investors nowadays are really looking at a mix of qualitative and also quantitative signals. So firstly, they want to see there's a strong founder and market fit, you know, such as, is there the right team to solve this specific problem? Can the founders clearly articulate the pain point, the market size, or where their solution is uniquely positioned to win, right? And then it comes early validation. This doesn't have to mean revenue just yet. It could be pre-revenue, but it does need to show that the market is paying attention. This could look like a waiting list of early adopters, a strong engagement from a landing page campaign, an MOU from a potential enterprise partner, or a pilot project that's already underway. So even a robust inbound interest on LinkedIn posts or newsletter sign up can demonstrate the pull. So I feel these signals really help to de-risk that important question, right? Like, is anyone actually going to buy this new solution? And the founding team itself is also a huge factor, because investors are, at the end of the day, betting on the people. So they are really looking for a domain expertise, a clarity for execution, and ability to navigate that uncertainty in today's market. And also, I feel finally, there needs to be a credible data-backed roadmap. And because investors want to see how you are planning to convert that early interest into actual revenue. So let's say if your pilot project are running, you know, what's the plan for turning those into contracts, right? If your marketing is actually having great traction and have great landing, what is the next step in the funnel to make sure those marketing leads can be converted? What's your SOP? So even pre-revenue, I think it's about showing evidence that the market wants what you are building, and that your team actually has the insight and structure to turn that, I would say, early traction into a real business. That's probably what I feel in my experience.
Yeah, I love that. And I so agree. I think like proving your model and making sure that the traction is really there before you go out and take investors' money. I'm really proud of that with DFX. We made sure before, you know, we started getting an engineering team and the UX UI, we had a model that was scalable and that we're solving a real problem, and that people were really being able to see the value from day one without us spending a lot of money on building out our product yet. So I totally agree. And I really appreciate that, Alice. Sabrina, what common fundraising myths do you see women continually holding themselves back with? I'm curious.
Yeah, I definitely see the most common thing is I needed to be more prepared. I needed to have all these people. I need to have my technology to be the best. Look at all my clinical studies, and then I can get funded. People are falsely believe that preparedness means they're ready. Instead, you see plenty of time that there are founders who are 70% prepared, right? Ready, but they're actually 100% compelling. So what most people, especially when they come from a scientific and medical background, we're so trained on data points and numerical things. Instead, what we're missing is that emotional connection, right? What I always say, if you don't have a social proof, if you don't have that ecosystem that support you, tap into what Alice said, a lot of founder nowadays, early stage, they are getting on social. They're getting all these patients going into their post to say, I want this. How come my doctor don't have this? That is a proof that there is actually a market for it. And therefore, they know how to get compelling messages that convert. So something that we do for our pitch rewrite is, what are the 8 persuasion that in psychological term that you have to write in everything, in how you speak, how you write your post, how you write even your deck. And there are certain format that need to be in, but if you don't have the psychological connection with people, then you're missing a whole lot of what people see as value. Instead of even some investors who are supporting these companies and come to me and would still the same thing. I would say, why people wanted to get this product instead of other alternatives, right? And they would always say, because we're the best, nobody can do what we can do, or we have this data point and study. And they're missing the mark of, actually, people don't care about your process. What people care about is the result that you're bringing. That might be cheaper, might be faster, might be easier, might cost less headache, less work. And that's what we're seeing is we have to stop feeling like we're not ready. We needed to start sharing the story, get specific storyline in place. And sometimes I would say you needed to top 3 story. The ways that you talk to your investors is not going to be the same as your enterprise buyers and not the same as the end users who are a physician or a patient. You need to know how to switch things up and then what to expand and what to shorten. And then you become more agile, more pleasing to the people that being connected. So I love to say this, people need to stop under asking and over explaining.
Yeah. And I think that's why, pitch tanks and any ways that you can really get your reps in, it's a muscle. I definitely didn't have this naturally. Jesse is incredible at pitching. He's got a really organic kind of way of building those relationships. And I've learned a lot from him. And I'm really glad that I have a business partner where we really have, that yin and yang opposite skill sets. And I think when you are at such an early stage, I think don't be afraid if you see someone that you need on your team, on your founding team, to shoot your shot there, because you never know where that journey can take you. Cheetah, what early stage indicators suggest that a company is ready to scale?
Love that question. So, revenue like that is without a doubt. But when I would start with like burn multiples, right? So in the past, if you had like 2 times, etc., 2.8, 3 times, it was good, it was great. But I think now folks are seeing more of less than 1. So for every $1 of €1 of burn, you're turning it at least into like 50 cents. Or like, $1 of like ARR, right? So it's like, okay, they understand how to convert that. That's really valuable. The other one is your net revenue retention. So your NRR, like, so if you're looking at like SaaS-based companies, etc., are you, retaining your like revenue over an extended period of time? And is it outpacing customers that are leaving the market or churn, right? So then that proves like product market fit, like over 100%. And most of the SaaS companies I see that are like, ready to scale are at like above 100%, 104, 118%, etc. And then your month over month, like revenue growth, right? So is it greater than a high single digit for 3 straight quarters? Because 1 could be a fluke. 1 could be like 2 could be like a market shift or something like that, but consistent, repeatable, it kind of ties into that consistent, repeatable, like go-to market playbook. And in that repeatable playbook, how do you have at least one channel, like where you're going to market with, that has greater than like, 50, 60% of new logo or like new annual recurring revenue, for instance. And I'm speaking like in just the SaaS world, but it's true across the board. So do you at least have one single proven channel that gives investors confidence that, yes, I can pour capital into this company because I can predict the output, because that's what they're looking, right? Repeatable, sustainable way in which, and they're not looking for 3 years or 4 years. I mean, I said 3 quarters. So how can you kind of show and deliver that? And a few of the ladies mentioned this, but and this is literally where the cookie crumbles, is operational readiness when you scale. And that comes down to people. Do you have the right people around the table to help get you, what got you here won't get you there. So when investors are looking around the table as well to that next stage, it's like, okay, how operationally ready is this team to scale to these growths? Because otherwise it all bleeds into the decisions that are made, the good and bad decisions that are made. So those would be some of the key things I would share across, your numbers, like your revenue, like your burn multiple, your NRR, like your net revenue retention, then your repeatable go-to-market, and then finally the team that you have that's able to scale as you scale.
That's why I love you so much, is because you're such a triple thread with your data, your marketing, but also your deal making side. And I think that's what I appreciate about your mindset so much, is I think marketing sometimes can be very fluffy, and it's like, I love your positioning on that. And I'm actually something that I'm really proud of us at such a low burn rate. I feel like DFX is really operationally ready to scale. And we put so much energy into that in the first 8 months of our company, so that we're really ready to put gasoline on that fire. So I really appreciate that. And Sabrina, I'm curious, what makes a founder story stand out of a really noisy and obviously competitive landscape that we're in right now with all of these different channels?
I think a lot of people mentioned great things. The question isn't just like what you're building, and it's why you're building and why now. There's something that I talk to all founders is that what I call a sales heat metrics. So that has 5 levels. Is that level 1 is how do you determine, is there people even recognize their problem? And are we talking to people who are not even conscious about the problem out there? And is how are people see the problem you're solving is actually has urgency to it? Is that more economic, socioeconomic, changing in landscape, things cannot be taught by us because payers are not covering this, or there's no solution at all, and then there is urgency to do. And also is how you represent trust in you as the company leader. And I know some people don't even want it to be the face of their company, but we always say, if you're the CEO, you cannot skip that. You kind of have to learn how to be liked by the public. And how are people trusting the product? As we mentioned about competitiveness, it's not to put anybody down, but simply you have the extra edge and also the entire reputation of the company. If I'm going to your website, is that going to tell me a very clear story? And anything that you're posting in social blogs, you're speaking on stage, do I get the same story and messaging? Almost like you are the hero for our entire community, right? You are the Batman for Gotham. Who is this person that you're representing, and where is your Gotham? And if we're not really clear on those things, and then the last thing I always ask people is, do you think the people that you work with have the wow factor? That means we don't want to continuously to chase them. We wanted to attract the right people. At the end of the day, we can do so many different things, and we have to resonate emotionally with the buyers that we encounter. And that same goes if they're pitching for investment, right? At the end of the day, they are the buyer. They're open up the wallet and checks, and they trust it in you. And that means you, as a leader, we are still doing business with humans. So how is your team and led by you and your co-founders or executive team is ready for this? And how you guys be sustainable despite the marketing changes, right? Those are the things that how we can stand out based on who you speak to and making sure all the messaging and story matches your level 5 buyers and not just people who are not even sure what's going on yet.
Agreed. 100% agreed. There is so much going on in today's world and ecosystem, especially in private capital. And I'm curious from Jennifer's point of view, what underrepresented founder have you invested in recently where they've used that to their superpower in their pitch?
So I think, what's important, and I think in order to, especially if you've got an underrepresented founder talking to a group of straight white men, right? How do they overcome that bias, right? And so the first thing I always say is humanize yourself, right? Share, oftentimes when an entrepreneur, a founder has developed a solution, there's a lot, oftentimes there's a story behind why they felt that was important. I love those stories. I love when my founder has humanized themselves, shared their personal journeys, shared their motivations and experiences, because it just, again, it softens the person you're speaking to a bit. The other thing is just really understanding, try to find commonalities with the folks that you're presenting or pitching to, right? Yes, when you look at me, if I'm talking to a group of, men, you could clearly see my differences. So what I'm going to do is a little bit of research talk, like about those folks. Did they work in prime brokerage? I worked in prime brokerage, right? I might weave that into my story, but trying to show where we have the similarities as opposed to ensuring that, as opposed to just being different, right? Show where you're alike. And I think, for us, right? And, I know your question was giving you an example of our story, but Gaingel's, considering that, we understand the plight and how difficult it is for underrepresented founders to get that funding. A lot of times, if we are on the cusp of making an investment, but we see a diverse founding team, that might get us over the line, right? Because, and by the way, in venture and in entrepreneurship, grit is super important. Women have grit, underrepresented founders have grit. Showcase that grit, because that's what venture capital loves. They want to know, yeah, you've got a great idea, but when who pits the fan, for lack of a better term, are you gonna, are you gonna go in a ball, or, or are you gonna pivot and figure your way out? And so those are just a few of the techniques or things that I will say to founders as they're pitching to different VCs, and just be your authentic self. If they don't like your authentic self, then trust me, you don't want those dollars anyway. Remember, when you're getting into an agreement with a venture capital, it's like a marriage. You're with them forever. So if you try not to be your authentic self, and then later, you can only play that game for so long, it can create more problems later, because they feel like they got something different, and you won't enjoy it as much. And if you're not in alignment with your VC partners, that creates problems in the future. I hope you could hear me. Was that good? Okay.
No.
I took off my video just so that maybe the bandwidth is better.
Even with your video off, I appreciate your perspective, and it shines through so much of I think that's what our relationship got built on so quickly, is our shared values with Gaingel's and DFX. And I love that, we shared about our, focus on underrepresented founders. And in, 35 minutes, we had such an incredible conversation that we're like, okay, how can we support the founders that aren't a fit for your investment thesis with DFX? And I think it's about, even if an investor is not the right fit for you right now, continue to build that relationship on those milestones milestones, because it doesn't mean that they're a no forever one. So I do really appreciate that. And I'd love Arkita to jump in on any kind of other things that you would like to mention from the superpowers for underrepresented founders.
Thanks. I was like, my gosh, I want to like step into this question because I feel so strongly about this. So I always tell a lot of the underrepresented founders is that, turn underrepresented into like unignorable or undeniable. And there's enough data, and you can Google this, you can ask any of your favorite GPTs for this information, but there's enough data to show like the value there, right? So I always actually encourage folks is start with an industry or segment stat and then say, hey, we're doing this, right? So our segment is already primed. Like diverse teams outperform peers by 33%. Here's how our 500,000 ARR puts us on that path. Like, boom, you're like saying a benchmark and you're like, hey, we're already doing it. So that's a superpower, right? The other one is pair each of your metric with a life proof point, right? So show your burn multiple or your like payback period or whatever right next to the fact that there is a 25% higher ROI for a female founded company, right? Teams with like meaningful diversity make 87% better strategic decisions. Well, this is our founding team, and here are the kind of strategic decisions that we have made that look different. Because this is the reality, is that as you have diverse teams, you're underrepresented, whatever, you've had to build like naturally resilience, right? And navigate bias constantly. So you're operating with fewer, warmer intros, and it teaches you to de-risk faster, iterate cheaper, and hear no without losing momentum. So share that. And because those habits will lower like execution risks for investors, because you've already shown them that, hey, I can handle a no. I can like de-risk very quickly as I navigate this investor landscape right now. So name a past obstacle and then share that experiment that you ran and you overcame and how your results prove that you worked through it. Because this is also really valuable, and we tend to go on the back foot. And then the last one I would say is like, one of the beauties of like being underrepresented is you see things that others don't even recognize as a problem, right? So it's like credibility with overlooked customer segments, for instance, and you unlock markets like Gen Zs, immigrants, whatever, global South consumers, whatever it might be. So map that white space like graphically, really communicate like, here's $4 billion left on the table because all the current tools don't support Spanish language tax forms, whatever it is, right? So really articulate that for them so clearly that it becomes undeniable, and then everything else doesn't matter. So lean into being the only at that table.
I love that. Thank you so much. I so agree with you. I think leaning in and seeing it as your competitive advantage and being able to communicate that effectively, I love it. I want to switch gears a little bit into the founder story. As we know, you got to have a lot of grit. You got to have a lot of determination. It is a lonely road. Alice, how can female founders or any founder prepare emotionally for this journey?
Thanks, Ella. Just first, I want to say I really definitely resonate with what you guys are saying, from Jennifer, from you, and from Sabrina and Akita. And I still remember you guys had that LinkedIn post about female founders and an achievement that female can actually do in the capital market. And I'm just kind of proud to be with you guys, in this space and standing in the world. And leading and supporting so many businesses. All right, so Ella, so now let's go into a little bit more like a founder journey side, and how founder can prepare emotionally, and also on the I think be more authentic and strategic in the storytelling side. So I think when we talk about being authentic as a founder, it doesn't mean just telling your life story unfiltered. It also means staying true to who you are and what you believe in. And also being very thoughtful about how you tell that story. Because as you guys say, at the end of the day, investors are also human beings, and they respond to authenticity. So what really sticks with them is if there's a clear, honest connection between your personal journey the problem you're solving. And you show them that what you are seeing is not just tracing a trend, but you are deeply invested in solving something that matters to you so much. And in addition, also, what you had to do to push through to get there, right? We love to see stories that show grit, resilience, and a deep understanding of the market. So I think to be very strategic and also to be a right storyteller, to build that emotional connection, you need to connect the dots between your experience, the business case. So let's say if you have pivoted 3, 4, 5 times to get to your current business model, don't shy away from saying that, right? Talk about how each challenge taught you and how it made your product stronger, how it made you who you are today, and prove that because of that journey, so you are the right person right now to lead this venture. Or maybe because it came from that specific industry that you had over 20, 30 years of experience, share that, explain the insight that you saw that other people didn't, right? Because ultimately it's about building both, I think, emotional connections and your personal confidence. Investors want to believe in you as much as they believe in all the numbers. So show you got the heart and show you got the clarity. That would be my takeaway, Ella.
I love that. And I think that clarity and heart definitely is what has gotten me here today, in the sense of I really saw DFX as the next obstacle for me in my career, in my entrepreneurship journey, that was actually doing a difference in the world. And so I really appreciate all of you women, because you guys are making such an impact, not only on my journey, but everyone on this call today. So I know everyone has really busy schedules. We're going to jump into a Q&A. Kat, if you want to kick that off.
Yes. So we had a few questions from the audience. The first one from Jared. Do we make us or our company the hero, or do we make the customer the hero?
I'll take that. You have to make everyone a hero, but you have to start from yourself, because if you think about the recognizable brand, it's all about our what is the hero or shero's journey. And when we start putting ourselves into the storyline, so one of the quick way that we leverage speaking as a stage to sell or fundraise is that we always create a open heart. That open heart is what everyone has shared today, is that emotional tie and communication and engagement to hook people in. Because at the end of the day, we're just human. And we all live our lives despite of our journey, our achievement, alkali, whatnot, right? And then same thing, a lot of people in medicine or scientific community, we're very much in the way of, we have all these letters, we're continue to learn, right? But how is that translating into a result that people actually understand who you are? So for me, about 6 years ago, when I started public speaking and launched my podcast, Provider's Edge, is because I was so burned out. And as a subspecialty for heart surgery is one of the highest burned out field, probably besides neural surgery. And all those neurosurgeons will debate with me, right? And it's that moment of you put yourself into the spot of thinking, wow, I'm doing something amazing, something good, but I'm keep telling myself, I'm just gonna do this now. Once I'm more established, once I'm more ready, then I will back away from putting 80 hours per week and being on call all the time. And because you're so high functioning, and they will say, why would you need an assistant? Why would you need a partner? You should be able to do it, right? And then it's the same motion and the false belief we have in entrepreneurship is that, oh, Sabrina, what do you mean building scalability day one? Let me just do this first. I'll get back to you later, right? They're not thinking about framework of stop skipping steps. If you don't have core purpose alignment where your entire company can talk about the story and the goals the same way, you lost people. And if you don't have the right product market fit, means how people, these level 5 people we're talking about, buyers, speak in their own language, and you capture that, and then you build an entire messaging guide. So then you keep connecting with them, you got lost. And if you don't reset yourself on how competitive you are, and then what resource you have, in that resilience part that we've been talking about too, right? The ups and downs of entrepreneurship. And that means you're constantly swing yourself out of your desire zone, which is passion and proficient. And that's what gives you grit. And instead of most people start swaying into distraction, discouragement, and the distress zone. And that's when they feel like they're doing something all the time. Oh, I'm speaking here, Sabrina. I'm going to this event. I'm pitching here. And I'm like, wow, all these top of the funnel activities. So are you capturing anybody? Are we converting things? Right? So when you're thinking about doing all this, that is your own hero's journey. How do you want to lead? Do you want to show up in the community as a hero? And what result can you bring? And then who you are representing, and be very, very clear on that, because we know Batman is very different from Superman, right? If you go into watch Superman, but somehow the Batman character comes in, you're like, that's why they're having a fight, right? And so how are you representing yourself, your entire brand, your entire business in the community as a hero? And then when you're solving the problem, you're actually saying, you guys who have these problems, we can flip it. It's not that you don't have enough. Let's put our customers as a hero, because what you're creating is impact. So when you can create impact for them, they also become a hero.
Wow, so eloquently said. Archita, I think that you raised your hand.
Yes, Kat, I'm going to just like add to what Sabrina said, because she added a lot of gems there. I wanted to just give folks a framework, because I love this question and it's such an important question to ask, especially with so many founders on LinkedIn, you know, kind of feeling like they have to tell their story, etc. So the framework I'd kind of suggest is, you know, if you put your customers in the hero seat, you could cast yourself as the guide who equips the hero to win, right? So what might that look like? So your customer, which is your hero, has a costly problem. You're a guide, and you hand them this solution, and then the hero overcomes the problem, right? Now your customer has overcome the problem, and now the guide asks for resources with investors to equip 1,000 more of these heroes to win, right? So if you were to be like, you know, hey, we have these designers, they lose 8 hours a month chasing unpaid invoices. That's the hero's struggle, right? When Sabrina mentioned like the hero's journey, what's your guide moment? How are you as a company guiding them? We've built this like solution, which is like a plug and play system. It's helped thousands of designers now get paid in one click, whatever that might be. That's the guide moment. Like, this is how we guide them. And then you take them to traction. And now, because of this is the hero's victory. Now, because of just this one click, their average time to like say cash or whatever it is less than whatever, 30 days. And then you go into like, hey, investors, now you funding us, let's us arm 100,000 more designers, expand this into other markets, right? So put the customer in the hero seat, but showcase yourself as such a strong guide, and then invite the the investors in to help equip other heroes have their hero moments, essentially.
Perfect, thank you. Jennifer, I don't know if you want to add anything in here.
No, I mean, I think they've covered, you know, the basic, you know, everything that I would say. You know, I love the fact that like it's, you know, the one thing Sabrina, the first thing she said was everybody needs to be a hero in your story. And that completely resonates with me. You know, it just, because you can't be successful without the customer. And so it's important that everybody turns out that way. But yeah.
Perfect. I had one question sent directly to me. So for underrepresented founders with 0 existing investor networks, what is your highest conviction playbook move to identify and approach the first aligned capital provider, turning a cold intro into a warm, trust-based relationship?
So I think let me just help, let me make sure I understand the question first, right? So I think what we're asking is, how do you take your brand spanking new into the entrepreneurial space? You're an underrepresented founder, which the stats are, you don't get as much funding as a serial entrepreneur and a straight white man, right? How do you make that connection? Did I get that question right? Okay, great. Well, number one, I think it's like when you're thinking about, fundraising, the number one thing, and you're an underrepresented founder, is finding out who supports underrepresented founders, right? That's always a good start, right? Are there, and I get there is actually a counter argument to that. And I have actually heard some founders going, I don't want money. I'm a woman founder, but I don't want money from a women founder fund because money is green and I don't need, money from not, a different pocket. I want it from the main sort of bank of that particular VC. But I would venture to say that VCs that understand that space and diverse founders, such as Angels, right? I already know that if I'm looking at a solo women founder or a women founding team, that I probably am not going to see they're not going to be serial entrepreneurs, right? Or there's a good shot that they're not going to be serial entrepreneurs, right? But for me, then I'm not looking to see if you've taken a company from zero to exit. I'm looking to see if you have experience in the space that you're in, right? Because I understand that women only get 2% of funding. The other thing that I would say is making sure whatever your product is, finding VCs that actually specialize in your stage and in your sort of your industry. Because I can't tell you how many times I've seen really great healthcare companies, but because the problem that they're solving is very nuanced, their membership and the partners and the GPs that are making that decision don't really get they don't understand the problem like a VC that is in that space every day. They understand the problem, they understand the vernacular. Remember, when you're talking to a venture firm for the first time, especially cold, you may only get 15 to 30 minutes for that initial call. You don't want to have to explain your problem for 20 minutes, right? So that's why I always say in my mind, and some people will disagree, finding a venture firm that actually understands the why underrepresented founders are important and why diversity and inclusion is important. And two, finding the VC that specializes in your stage and industry.
Yes, Sabrina, I see your hand up.
I was gonna add, I actually had a TED Talk last year just on this topic of underfunding. I discussed 3 myths. I think one of them is very important that Jennifer tapped on is what I call this the golden cloak of gatekeepers, right? So sometimes it feels like we just can't break into certain communities that's already set up. However, I always believe we can select and tap into the right ecosystem that are attracted to who we are. Just like the last conversation we had about creating your own hero's journey and being in community, do exchange network and connected to people who care about these niche areas. One of the things that we do as well is we look into these niche specialty who just care about mental health, just care about diagnostic, just care about women's health, and put them on stage with investors, decision maker who are also in that area, right? So it's really doing a lot of research on where people are at, what they're interested in, and then figure out the people who are already in the space who can do either matchmaking for you or getting into the network who you can find out this information. So you can then tap into that person's buyer persona, right? And then there are always a reason why certain people just instantly build trust, but others don't. It's because you haven't tapped into their buyer persona yet. So be able to figure out, we have so many resources out there, right? Like connect with us. We probably can point you in the right direction and doesn't feel like this is an endless resource. You don't know what to start, or I don't even have any resource, right? Either way, that's not true. Is we have to create the right reality and be able to think more abundantly.
And I would like to add something, Kate, if I can. So I definitely really resonate with what Jennifer and Sabrina just said. I think definitely find mentors, find your peer founders, because maybe there are synergy that you will be able to create together, or even a coach as a start to build your network. So especially in the very, very early stage, don't wait until you need the capital to start thinking about fundraising, because you really want to raise with, options, not out of desperation. So time and time again, I'm speaking with a lot of founders, business owners. This is what I am definitely advising them on. And if everyone can remember this notion, we will always stay in the driver's seat and then get funded in the way that your business can sustain, in the way you want it to be sustainable.
Yeah, very well said. And we have one more question that was directed actually to Jennifer. What non-traditional signal do you now prioritize to gauge investor readiness in underrepresented founders that wasn't valued 3 years ago?
Non-traditional, that's a tough one, because I don't really, every VC is different. So what's traditional or non-traditional to me could be very different. I think for me, again, as I sort of mentioned earlier, when I'm looking at underrepresented founders, I'm not looking for serial entrepreneurs per se. I'm looking for experience. I am looking for them to tell me a story that kind of exemplifies their grit, show me how they've taken challenges and have been able to make those work. Underrepresented founders who can get into rooms quickly, show me, like, when they tell me I've already met with these VCs and they're already looking at me, I always like that. To me, that's super impressive, because they're not easy to get those meetings, right? I also look for who their advisors are, right? So like I mentioned, they may not be serial entrepreneurs, but what is, who's advising them, who's on their board per se, that can help fill in those blind spots potentially. So that is something that I tend to look for, or ask if they don't have it, is just, who do you go to when you have a question around, depending on what the company is, cybersecurity, or strategic sales, or breaking in from B2B to B2C, you know what I mean? So it's those are sort of the things that I look at, but I don't know if they would be considered non-traditional. But anyway, I hope that answers it.
Yeah, absolutely. I don't know if anybody else has anything to add.
I think that.
I just say one really quick thing is, your community, like, results speak louder than anything else. Like what DFX is doing is a great example of that. When your community leads, the network effects of like doing what you're doing, especially in a market where, there are not a lot of people that look like you that are leading this, that adds so much credibility. So lean into that, build, wait lists, build communities outside of paid ads, outside of those traditional paid channels, to show how you're driving it. And then the second one is lived experience. If you can painfully describe a specific problem that you faced, Ella, you faced while you were fundraising for your first company, right? And now a community like DFX opens up the door, it really helps drive more credibility. So lean into that superpower that, Jennifer, Sabrina, Alice, all of them mentioned as being that underrepresented founder, and use that as a door opener.
I
Well
love
said.
that. Yeah. Like, big heart for that. Ella, I'll pass it back to you. I know that we're going to jump into breakout rooms, so I'll leave it to you.
Yes, Jennifer, Archita, Alice, Sabrina, thank you ladies so much for your time today. We appreciate you so much. Guys, make sure to connect on LinkedIn. If you're in New York, you got to head to one of Jennifer's events. If you're in Germany, you got to, hit up Archita, and then we have Dubai and all of these incredible places globally that we can connect you to. So if you want to stick around for breakout rooms, Jesse and I will be leading those. And we really appreciate your time today. These have been 2 incredible panels, and it's the first of many. Thanks, guys.
Thank you, guys. Thank you, Ella. Thank you, Jesse.
Yep. Thank you for being on. That was a phenomenal panel. Definitely glad we went first. The guys went first, the woman second, and the woman killed us, so that's good. That's how it usually goes in DFX world. So glad that I didn't have to follow up that hour. Phenomenal job. And now we'll go into these breakout rooms. So the breakout rooms, you'll see a thing that says breakout room at the bottom of the Zoom screen. These are networking sessions that we do. We have these calls pretty often, as mentioned throughout this, and it'll give you a chance to essentially introduce yourself, talk about what business needs you might have, talk about what you can provide to the network. We'll do 2, and we'll probably keep this to a half hour. I think that'll probably be long enough. So everybody, when you speak, just be very clear, crisp, concise. Your name, your company, what you're working on will be good referral and what you can provide. So we're going to try to keep them to about a minute apiece. We'll skip over the DFX team so everybody who is outside of DFX can speak and let themselves be heard on that. And then we'll come right back into this main room and just conclude the day. But this has been phenomenal, and really appreciate all of you hanging on and staying. Hopefully it was very informative.
And if you're on the phone, I was yesterday during getting into breakout rooms, it comes up on the top right corner. So you just need to, I'm not sure, Thais, if you've initiated that.
Thais still on?
Yes. Just because if I open, you two are going to the rooms directly, so I'm going to open here.
Thank you. Thais pulls the strings behind. Ella and I are just figureheads. She's the real puppet master.
Literally.
So, yeah. So you guys can choose which room you would like to be, either Jesse or Ella. And if you're on the phone, it's on the top right side. And if you're in your computer, it's on the bottom. You can just select breakout rooms. And if you need any other assistance, just please let me know and then I can help you here. And in 5 minutes, I will automatically assign yourself if you didn't do yourself yet.
Sorry, how do I join another room? I don't see the breakout room.
On the bottom, it's breakout rooms, like an icon, a square icon. So you can just click there. Do you see in your screen?
No, at the bottom of the screen, I just see participants, chat, react, share, companion, meeting info, apps, and more.
Let me see if I can share.
You have to click the more.
Here.
Got
Do you
it.
see
Okay.
it?
Yes, I found it. All right. Thank you much.
Anyone else? I can also assign you here manually, so just let me know.
Where should I go?
So we can take the screen down, Thais. Perfect. Let everybody come on back. That was a good 2 days. I think that there's a lot of value. Yeah, that was fun. Hopefully everybody can take something from this. Let's see. We'll give everybody 2 minutes, let them come back, and then we'll do some concluding next steps. Essentially, if you want to participate in the DFX ecosystem in any way, we have free memberships. We also have a discount code, so we'll talk about that a little bit for those who want to list an opportunity. Let me just show you that. Perfect. Let's go like this. Okay, to 29, we're getting there. Okay, so let me drop a couple of things in. For one, we were just talking in the other room about our events that we do. So we have a lot of events coming up. If you're in Atlanta, hop on this Atlanta Tech Week Reconnect. If you are interested in joining our networking power hours, they're always phenomenal. Definitely jump into this. Global Connections, that's more global CEOs and people doing cross-border business. That's a great one to jump in if that fits your profile. New York Tech Week, if you went to New York Tech Week, or if you're in New York, hop on that. We can all kind of debrief from the craziness of New York Tech Week and hopefully reconnect. We have a real estate pitch tank coming up. If you've never attended one of our pitch events, they're always fun. You learn a lot about these different industries. If you're an investor, you might see something you like. If you're a founder, you might get some good ideas. We always do one in real estate pretty much every month, and then we do one at least in the venture space. So this month, or August at least, is women in health tech. Because we're entering the summer months, really July and August, they're probably the two slowest months for hosting events in general in our space. So we've cut back a little bit on our events, but come September, you'll start seeing us host multiple events per week. We also do in-person events. So typically those are Boston, New York, Atlanta, Dallas, a couple other areas. I'm just going to drop this in the chat here. And then from DFX in general, if you're not signed up for our platform, you can go to joindfx.com. It'll redirect you to Dealflow Exchange. Dealflow Exchange spelled without an E here. And you can sign up for our network. It's free to sign up. You just click sign up. You fill this information out, just name, email, password, sign up, and then it'll kick you and you'll have an upgrade membership spot. So sign up regardless, become part of our ecosystem, participate on these calls. If you're listing an opportunity, it's only $29 a month. If you're providing services, $39. If you're investing or lending, $49. We don't charge any transactional fees. You can use the code SUMMIT here for 1 month free. Just test it out. I mean, everything we're doing is to provide as much of a ROI to our network as possible. I know that all the people who are in our network feel that way. Many of them are on this call, but if you're new to our network, we're just looking to support you again as much as possible. That's why we're asking for feedback on this event. You'll get something, I'm sure, in your email that asks for that. The more we can understand how we can help you move the needle, the better this community is going to be for you. And if we can make it better for you, we can make it better for a lot of other entrepreneurs. So thank you all for joining today. I thought this was just a phenomenal second day. And looking forward to having one of these again. It's funny when we put these on, it's always, you know, oh my God, this is a lot to get this going and coordinate and everything else. But then at the end, it's like, oh my God, when's the next one? You know, so really happy that this was again the feeling today, and appreciate all of you hanging on to the end, and looking forward to supporting you all in your business journeys. We got some clapping in the background here. All right, bye everybody.